Okay, so I guess we can get started. Call the meeting to order. And the establishment of a quorum.
Yes. Director Schmidt,
Here.
Director Bella,
Here.
President Kurt or Wheeler,
Here,
we have a quorum.
thank you. Pledge allegiance. Bruce, you want to do it?
My pleasure. Yes, please join us. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Item 2, public comments. Have we received any public comments?
No comments.
Agenda review, additions. Anyone want to change anything on the agenda?
Yes, on item 13,
Right,
we'll leave as is, but then, if we could, any comments about Mr. Giacomi, I would like to put it up in the communications.
you want to do it then or earlier,
For,
just to get it out of the way, rather than waiting till after all the hearings and.
it's just she's going to read just a few sentences from, just for people to get to know who this person is, that's all. I think on the communication will probably fit the best. Okay.
Sounds good.
And then
And
we
then,
also discussed pulling 8B because the finance committee hasn't had a chance to review and discuss the internal controls assessment.
okay,
Sounds good. I know we have time to finish that report. So, okay. Acknowledgements and presentations.
Were we thinking about moving up 8D for convenience for guests?
Yeah, we can do that. We're going to,
A temporary guest.
our temporary. So
yeah, so
we can-
8D
8D we would do
under
as
8A.
8A.
Yeah.
That'll be fine.
So 8D will be 8A1.
Right. Okay. Acknowledgements and presentations.
All right. So we do have a proclamation here honoring Nicole Sankula upon her retirement from the Bay Area Water Supply and Conservation Agency. So I can give, some of the highlights rather than necessarily reading everything here. And I imagine Lewis might speak a little.
No, I was gonna say I will do the same next week when I present her with the proclamation. I'm not gonna go through it because I would imagine that there will be many other proclamations coming in. And we could be there till midnight reading whereases here and there, so.
Yeah.
So,
I hope we're not reading them all.
so I probably will select a few things that are specific to the Mid-Peninsula Water District and our relationship with Ms. Nicole Sankula. And for our guest today, Ms. Sankula is the former CEO, general manager of the Bay Area Water Supply and Conservation Authority. She retired in December and she attended the meeting last week, what was her last meeting. And then next week, we're going to have a retirement thing, present her with a bunch of proclamations. Hopefully she'll have a lot of walls, which is.
Need a wheelbarrow here.
Yes.
There are
And,
26 separate member agencies
and,
in
yeah.
Alaska. So,
And she's gonna be moving up to Oregon, near Bend, Oregon, where her son lives and they have a new baby, so she's over the moon about the baby.
proud grandma.
And, but Bosca decided to keep her as a consultant on an as-needed basis as well. But the new CEO has already, the change has been already taking place, and the new CEO has already been functioning for, well, almost a month now, so. But,
Yeah, and so just to, the slight background, she has been with Bosca since its inception. in 2003, and before that, she was with the Bay Area Water Users Association, which was the kind of predecessor organization. So she's been serving the entire Bay Area for decades now, and retiring as CEO. And I've known her for years back in my consulting days as well. And she, it's a loss for us to have her retire, but I think everyone's very grateful for all of her contributions, which are detailed in here and many after decades of
She did
leadership.
very good.
So we'll have the board members sign, and I did confirm that Director Zukas actually will be back in town this weekend, so we will be able to get him to sign before we present it next week.
Okay.
Okay. Consent agenda. We have 2 items on the consent agenda. Any questions?
No.
No? No? No, nothing
Need a
for me.
motion?
We need a motion.
Oh, so moved.
I will second that motion.
Vice President Bella,
Yes.
Director Schmidt,
Yes.
President Wheeler,
Yes. Okay, so on to hearings and appeals. We have none. Capital improvement program, we have nothing. We're going to move item D. Correct.
Yes.
Yeah. Consider resolution 2025-3 approving appointment of new board member to fill the term of the vacant position in Division 4 position through November 3rd, 2026. Serving out the rest of the term. Okay, you want to address it?
Yeah, so as you know, Director Jordan was elected to city council, resulting in the vacancy for Division 4. So we did a full outreach campaign to advertise this opening, as well as the opening that Director Schmidt will be leaving with us shortly, including mailing postcards to everyone in those 2 divisions, and the webpage outreach, mailing and, City of Belmont's newsletter, daily journal, and of course, word of mouth. So I think the outreach was quite successful. We actually received 7 applications overall, 4 for Division 4 and 3 for Division 5. And so last week, President Bella and Vice President Wheeler interviewed all 7 candidates over the course of 2 nights, and have a recommendation. So Joanne Covington is the recommendation for Division 4, and she's here tonight. If she'd like to give, I know we've already been chatting a little bit, but if you'd like to give a little bit of a background and intro to yourself.
Sure. My name is Joanne Covington. I've lived in Belmont for 28 years, so proud resident of the city. And I currently work as a chief legal officer for a company called Glideways. And we do public transit that's both electric and autonomous. So new way to move people. Very interested in clean air and clean water, and thrilled to have an opportunity to serve with the board and support the water district. So thank you.
And we also have Chuck Cotton, who is the ad hoc committee's recommendation for the Division 5 position. So if we want to cover intro.
Okay.
You know everything about cheese now, so. Hi.
So it's Chuck Cotton. I've lived in Belmont for 30 years, and I'm currently semi-retired, but as you know, we're the cheesemonger, but I'm also a board member for the City of Belmont for the Vector Control District for Belmont. I'm also a board member for the Belmont Boosters Music of the Park program, and a docent at the Belmont History Room, which I will be at Sunday, if anybody's interested. I have a background in business. I have worked in many captive leasing organizations, so I handled many roles from bad debt, remarketing, resale, recycling, and mostly in tech sector with a finance slant to it. So I started in my retirement in 2019, and so I'm enjoying giving back to the community. I've also been a park and rec commissioner for 6 years prior to that.
Thank you.
So, yeah, just a quick comment, the quality of the applicants was extremely high, very, very good. Group of candidates that we had, so kudos to staff for the outreach. And, they all presented themselves very, very well. I mean, we only had, granted, maybe 30 minutes to 35 minutes to get to know the person, but, they were all very experienced in their field of work, and they would have brought, all of them would have brought something different to this group, which is what we look for. And, but obviously, the two that we have here, in my opinion, and I'm sure it was unanimous between the two of us, that they presented themselves for the best at the time, so congratulations to both of you.
Thank you, it's an honor.
Yeah.
And let me say that I agree completely with Louis that we would have been happy with any one of the 7. They were all very community oriented and had an interesting range of backgrounds. And it was, in some respects, an awkward decision as to what we would emphasize or not emphasize type of thing. But candidates that we managed to find were well qualified. So I welcome you to the MPWD family, and see how things go in the future. With that, do you have any questions or concerns?
Can I change my mind?
No, I don't have any concerns. I'm gonna limit my discussion solely to this agenda item and Division 4. I am not involved at all in your decisions regarding this Division 5. And I'm very glad to see our guests today, and I'm sure they're very qualified. Look, I put a great deal of weight on exactly what you two have said. I do note that I do not have information on the other candidates. That was not included in the packets. If they had any indication that they're still interested, I probably would have to say I'd want to defer so that I could independently consider the information about the other candidates. But they're not here, there's no indication of that. So I'm happy to move forward with this, but it might be something you might want to consider on future occasions.
But well, we hope that they will stay engaged and interested, and you never know what might happen. And maybe one or more of them will end up in the diet in some future. So they are highly qualified. We'll have another recruitment when it comes up, so.
Okay, so this is
So we have a resolution.
resolution, and we need a full motion.
Absolutely. I will be more than happy to offer this resolution to 2025-03, approving appointment of the new board member to fill the term of the vacant Division 4 position through November 3rd, 2016.
I'm happy to second.
Thank you.
Vice President Bella,
Yes.
Director Schmidt,
Yes.
President Wheeler.
Yes. Welcome aboard.
Thank you very much.
I don't know whether you want to stay and hear the rest of the evening, but
Oh, I
you're
do.
free to. We've got a slide presentation coming up. So, but you're free to leave if you want to. Or you just, so.
Okay.
Thank you. Let's move on to agenda item 8A, which is a report and review regarding our investment structure and plan performance for the public agency retirement services PARS. Kat, you want to start?
Yes, so this is a review that the board tends to do every year of just the performance of our, pension investments over the last year. And you'll be asked to consider resolution 2025-01, approving the plan investment portfolio for 2025. The resolution is written as if we're keeping the portfolio the same, but you have the option, of course, to change it as always. So we do have Tanner Love and Jennifer Meza here from PARS. And it looks like we also have Dennis Mullins from PFM to go over the presentation of the performance. So if you would like to take over.
Perfect, thank you. And I just want to confirm, Dennis, can you hear us and can we hear you?
I can hear you loud and clear. I'd have no video.
Okay, perfect. We can hear you as well. And I just want to confirm everybody can hear both of us?
Yes.
Yes.
Perfect, thank you so much. Well, good evening, board president and members of the board. Thank you for having us here today. Will I be showing my screen or will somebody be presenting our presentation on the screen?
So I have the presentation up for you and I can guide it for you if you need me to.
Perfect, yeah, I can't see it on, let me see here. Oh yes, I see it on my end as well. Perfect. So again, thank you so much for having us here today. We're going to go ahead and talk to you about your Section 115 program that you use to put money aside for retiree healthcare obligations and for pension obligations as well. We'll go ahead and get started just to give you, as always, an administrative review, a couple of minutes of that, and then we'll go ahead and go into detail regarding the investments. If we go to slide number 3, well, actually, maybe 5, yeah, thank you. I know there's some familiar faces here today, just as a reminder. Oh, slide number 5. Perfect, thank you. Just as a reminder, all of the different companies under this program that are administering the plan for your district. PARS, we are the ongoing administrators and consultants for the plans. We're doing all of the record keeping, accounting, audits, and so forth. All of the money is actually being held by US Bank. So all of the assets that we're going to discuss today, they're directly with US Bank. They safeguard those assets to make sure that they're exclusively used for the purpose that they were put into the account for. These assets cannot be touched by creditors of any company or even the district. And then the portfolio manager for the program is PFM Asset Management. If we go to the next slide. Okay, it gives you some information regarding the background of the program itself. Once again, the program here is to be used for an essential government function, which is either pension or retiree healthcare. All of the earnings on the account are tax exempt. We do have a private letter ruling from the IRS that confirms that. And the district does have access to the funds to either pay down retiree healthcare obligations for those retirees already receiving it, or for pension obligations as well. If we go to the next slide. One more slide. So the way that the presentation is broken out is we're going to talk about the retiree healthcare obligations first, how much money you have in the program, then earnings. Then we're going to talk about the pension portion and the liability as well. And then we'll go into the investments in case you're looking at the rate of return, market outlook, and any questions that you may have there. The OPEB portion of the account is invested in what's called the moderate strategic blend. The contributions into the program as of November 30th have been a total of $3 million. The district has taken about $200,000 out of the program for those retiree healthcare obligations. And your net investment earnings since the initial contribution back in 2011 has been of over $1.3 million in the account. That makes your total as of November 30th at about $4.2 million. The next slide just gives you a graphical representation of when the money came in from the district, when the money has been taken out for that healthcare obligation, and the total assets throughout each fiscal year. And then the next 2 slides, what we tend to do is we like to summarize your OPEB actuarial evaluations. So you get a sense of the participating group that's eligible to receive this benefit or maybe currently receiving it, and also just to highlight the liability for the district. These reports are not done by PARS. Once again, these are done by your actuary. This information is as of June 30th, 2024. And you have about 24 total members that are eligible for this program on there. And I do apologize in case I cough in the middle of this presentation. I'm recovering here from a cold. Excuse me. On this next slide, we show that the district's liability is $3.2 million. Your actuary estimates a long-term expected rate of return for the funds in the program at about 5.5%. In one more slide, we won't change it yet, but you'll see that you actually have exceeded that return since inception. The district is currently at a great funded status at about 120% funded. We have about less than 5% of all of our agencies up and down California that have done such a well job at funding this program. So good job to the board and the district for making the decision and being in such a well-funded status for this program. This slide shows you the historical rate of return since inception, with the inception to date at 5.84, exceeding that long-term expected rate of return from your actuary. And you can see how it's done every year. We go to the next slide, we'll talk about pension. The pension portion of the account is also in the moderate strategic blend strategy. This portion of the account started in 2018. You contributed a total of $1.6 million into the program. There has been about 1.615 taken out. The net investment earnings have been left behind for the most part of $578,000. And that's what you're currently seeing as of November 30th as your account balance of $562. Next. Here it just shows you a graphical representation of the contributions, distributions, and total assets. You can see how the contribution came in 2019. We've seen money come out, and then you see the residual earnings that were left in the trust. Again, there's no requirement from your district at any point in time to fund the program, to take money out. It's very flexible. It's up to the district's discretion. And then the last two slides I'm going to cover, the next slide goes over your CalPERS actuarial valuation. This is directly done by CalPERS, just to show you the liability that you have there. They're always about a year behind with the valuation. So this is as of June 30th, 2023. We compare it also with 2022, so you can see the trends from each year. We do see your unfunded liability increasing about 1.1 million on there. The funded ratio is still pretty strong, but it did go down from that previous valuation to 91.4%. Again, the district is in a very well-funded status. Typically, districts up and down California are anywhere between 60 to 80%. So you certainly are above that. This also doesn't include that additional $500,000 that you have in the PARS 115 program. Your employer contributions based on the CalPERS valuations are expected to continue to rise. From about 200 or 0.2 million to about $200,000, increasing by about 45% in the next couple of years by fiscal year 2030, 2031. So we just wanted to remind you of where you're standing as far as your liabilities for both programs and what your current assets are for the program on each one. Again, we don't administer the actual benefits for either retiree healthcare or for your pension. We just administer the 115 program that allows you as a vehicle to put money aside and be able to possibly earn a greater rate of return than your general fund to pay down these liabilities in the future. And then the last slide, slide number 20, shows you the returns for the pension program on the account. This, since inception, has returned 6.3%, and you can see how it's done every single year. That is just a quick wrap up of the administrative portion of the account. Before I turn it over to Dennis to go ahead and review the investments in detail, does anybody have any questions on the administrative side?
Bruce?
Yeah, just a quick one, Jennifer, you mentioned that the funds are held in US bank only. Is it normal that funds are held in a single bank, or there are other plans or districts that put the funds in different banks.
No, yeah, so PARS is tied with US Bank. All of our, 500, 600 plus Section 115 programs, they're all under US Bank. So US Bank holds all of the assets nationwide for us.
Good. And I like the moderate strategic that we are in, especially now when, the immediate future is kind of a little bit not known and it's not certain where we're gonna go. And I think that the safe way to proceed will be probably the wise way as well. So, thank you for that, yeah.
Perfect.
Any questions? Thank you. I guess we can go on to the next step.
Okay, I'll go ahead and turn it over to Dennis to discuss the investments.
Okay, can you hear me?
Yes, we
Yes.
can.
Okay. I'll do my best. The audio keeps cutting in and out, but I should be able to review the investments. Can you go forward to the page 2.1? That's about 5 pages ahead. Let me know when you get there.
I wasn't there.
2.1. Both your OPEB assets and your pension are in the same pool now. For a while, the OPEB assets were in a more conservative asset mix, but now they're both in this moderate strategy. The moderate strategy has an asset allocation of roughly 50-50. You're half in stocks and you're half in bonds. These next 2 pages show you the investment returns of this 50-50 pool. This information is a little stale. This is September 30. But with all of the volatility we have seen in the market, we are just about back to where we were at September 30. So this is a pretty fair representation. Your total portfolio across the top, you can see for the third quarter, 5.58, that's a very good quarter. If that were to continue over the course of a year, that would be roughly 20% plus, which would be a really good year. Year to date, January through September 30, 11.13. And for the trailing year ending September 30, which is October 1 of 23 to September 30 of 24, you can see the total return there of 21.55%. It was a spectacular year. Both stocks and bonds did very well. And again, you're 50-50, so everything did very well for the portfolio. For 3 years, which includes the terrible down year of 2022, you're averaging 3.73%. That's per year. So that's just under the bond return that we're getting right now over the last 3 years. And that 3-year period includes one of the worst years we have ever seen for a diversified portfolio. Just to review, in 2022, the stock market was down 18%. The bond market was down 11%. So it was a terrible year for a stock and bond portfolio. That's all in there, and you can see you're averaging 3.73% per year. That's a cumulative return of in excess of 9, almost 10% over that 3-year period. So what does that tell us? That tells us the market has recovered from the losses of 2022, and we've made some growth over that 3-year period. For 5 years and 7 years, the portfolio is averaging 6.8, 6.45%. And again, that's per year. And then back to inception, 7.28% per year. The previous pages showed you your individual return, remember, these are pools. One of the great features of this program is you're invested in pools, which allows you to change, which you've taken advantage of that in the past. And because of that, I'm showing you the returns of the pool. But in one of the previous pages, PARS reported your compound annual growth rate on the OPEB is 5.84. That exceeds your discount rate of 5.5, which is important. I'll come back to that in a second. And then your compound annual growth rate for your pension account was 6.3. So the timing in which you jumped into the portfolio, made your initial investments, plays a big role in that. But that's where all those numbers come from. As you look across this chart, you can see we break this into then major asset classes. So domestic equities, you can see the one-year number, 34%. Great year for the S&P 500. And then down, as you go down this chart, you'll see the individual holdings. Again, another one of the features of this program is complete transparency. This is what you held as of September 30. Dodge & Cox, iShares, which is BlackRock, Columbia Contrarian, etc. These are mutual funds and exchange-traded funds. When it says ETF, that means it's an exchange-traded fund. The rest are mutual funds. And we use these funds because they're the most cost-effective way, the most efficient way to build a diversified portfolio. We could purchase individual stocks and individual bonds. That's the way we used to do things 20, 30, 40 years ago. But mutual fund expense ratios have come down so much that it's actually more cost-effective now to use funds. Funds also give us tremendous diversification, right? Most of these mutual funds or ETFs hold hundreds, if not thousands, of individual positions. So we've diversified away all of the individual company risk. All of these mutual funds and exchange-traded funds are independent companies. They have no relationship to U.S. Bank or PFM Asset Management. There's no financial incentive for us to use any of these funds. And last, mutual funds trade with no commission. So as a portfolio manager, I can tell you it's really nice to have that feature to be able to trade the portfolio with no commission. So just a little bit about the portfolio there. Let's go ahead to the next page, 2.2. And you'll see the international stocks. We hold domestic stocks. We have large cap, mid cap, and small cap. And then in international stocks, we have developed markets, which are basically Japan, the UK, France, and Germany. And then we have emerging markets, which are primarily Latin America, China, and India. And so we view those as distinct markets, and we invest in funds in each of those areas. You can see across the dark blue line, international equities for the year, 23%. Not as good as the US market, but still good. For other growth, we have real estate and we have global infrastructure. Again, really good years if you go down that one-year column. We didn't hold these funds over the last year, but you can see the funds themselves are reporting very strong returns for the year. As I mentioned before, everything did well. And then we come to fixed income, which is the other half of the portfolio. The fixed income in your portfolio is about 95% of it is high quality investment grade intermediate term fixed income. So a good benchmark there, we use the Bloomberg US aggregate for most of it. We're actually a little shorter than the aggregate. The duration of the aggregate is about 6 or 7 years. The duration of your fixed income portfolio is about 5 or 6 years. So very high quality, intermediate term. And you can see for the 1 year, 12.43%. So bonds had a great year. That's the highest return for a trailing year for fixed income that I can recall in my 40-year career. And the reason bonds do really well when bonds are yielding 3.5%, the only way they go up 12.4% is that prevailing interest rates come down. And over the last year, now again, this is a September 30 report, but over that last year, the Fed, the Federal Open Market Committee, was cutting interest rates. They only cut overnight rates. We're in the intermediate space on the bond market. We care what's happening to intermediate interest rates. Those are set by the bond market. And over that period, the consensus of bond traders was rates are coming down. So bonds sold off, rates came down. And so it worked very well for us over the last year. Now, as we go forward, before I do that, let me comment on the very last section on page 2.2 is cash. Money market returns over the last year, 4.9%, very high after several years of zero. And that's the overnight rate that the Fed controls, not directly money market funds, but the direct effect there, money market funds are going to pay just a little bit less than what the Fed's overnight rate is in a rising in a falling rate environment. So it was a good year for everything, every element of the portfolio added to the returns. Any questions about the performance numbers before I move on?
I have a quick question. Dennis, could you go over the difference between the mutual fund and ETF?
Sure. So ETFs, exchange traded funds, are a lot like a closed-end mutual fund, but there are some key differences. So mutual funds, as I mentioned before, trade with no commission. That's the good news. The bad news is that mutual funds all trade at the end of the day. And the market closes at 4 p.m. Eastern time. And as a portfolio manager, you put your orders in throughout the morning, usually. If a portfolio needs to be rebalanced, or if anybody wants to raise cash for a distribution, or if you've made a deposit and we need to invest that money. So put the trades in the morning, and then you watch the market. And sometimes there's a lot of volatility between, let's say I put the orders in at 10:30, 11 Eastern time. You go to lunch and you come back and the market might have moved 6 percentage points one way or the other. There have been several days in the last couple of years where the market went up 6% after lunch. And so the downside to mutual funds is that they all trade at the closing price of the day. And when I put the orders in the morning, I literally don't know where they're going to trade. I have a pretty good idea, but I don't know what they're going to close at. So that's the good and the bad of mutual funds. Exchange traded funds are a little different in that they trade throughout the day like a stock. So if I put a trade on an exchange traded fund in at 10:30 in the morning Eastern time, it goes directly to the market and I get a confirmation immediately of what the price was on that trade. That's like a stock. So those are the key differences. And then ETFs trade with a commission. So after all of that, I like having both in the fund. What that allows me to do is if we're in a really volatile day, or maybe there's a big economic news announcement, in the afternoon, but someone says, I need to make a distribution out of this portfolio, I can put a trade through on an ETF right now and I know exactly where it's going to go. If I don't have that kind of volatility concern, I can just rebalance the portfolio and I can trade the mutual funds with no commission. So those are the key differences between the two.
Good. And you also mentioned the real estate fund. Is that you mentioned it as a comparison, or that we have part of the portfolio in the real estate fund, and how if anything, how did that do?
If you look on page 2.2 under other growth, we have the real estate funds there. We've only got one. It's the Cohen and Steers Institutional Realty Shares, And we didn't hold it for the year. You can see it had a 15% quarter. But that's just luck, right? We didn't know it was going to have a 15% quarter. We like real estate as a diversifying assets. A lot of people include it under stocks as an economic, or maybe as a category of the stock market. But it's not one of the 10 economic categories of the S&P 500. So we break it out separately. But the real estate fund is technically a REIT, R-E-I-T. It stands for Real Estate Investment Trust. This is a mutual fund that invests in real estate, mostly multifamily, so big apartment complexes, primarily on the coasts, but you get geographic diversification. So you're not all in one market. And then also they invest in a lot of these warehouses that are going up, these ugly warehouses that they're going up in every town in America. These things are cheap and they are profitable.
Right now, where houses are, yeah,
What's-
absolutely. All right, good. All right, thanks. Thanks, Dennis.
Yeah, but that's the real estate, and it's a really small portion of the portfolio. It's, as you can see, 2.4% of the portfolio.
Yep. Thank you.
Okay.
I did it.
Sure.
Just briefly, Dennis, I appreciate you said the prices have bounced back to where they were in September. Is there any particular reason why this is using September prices?
Yeah, we don't have the December reports out yet. We
Can't that just
normally
be-
have I'm sorry?
I'm assuming, I guess I'm wrong. I was assuming you could just pull it up and find out what it was 5 minutes ago.
Yeah, I
That's not
can,
the case.
but when it comes to published reports, those have to be reviewed, and they go through a separate group. Yeah, I've learned over time not to do that. I get in trouble for doing that. But yes, as you're exactly right. As a portfolio manager, I can look at the portfolio every day, but I don't get the returns. I can get the individual prices, but I'm not getting calculated returns percentages.
Okay.
And I don't get the benchmarks. But yeah, we usually have the December reports out about right now, usually around the 20th of the month following the quarter end. So I expect the December reports literally any day.
Okay, thank you.
Yeah, but you raised a good point, and let me kind of transition into the outlook. There's a lot of pages in here, but I don't like to go over all of them. But as we go into the outlook, I want to go back to the point. This moderate portfolio is 50% stocks and 50% bonds. So we care just as much about the outlook for the stock market as we do about the outlook for the bond market. And I've got relatively good news there. So we just finished 2 really good years in the stock market. It was the recovery from the very, very bad 2022. So 23 was great, 24 was great. So what's 25 going to look like? Probably a little lower return. Our best estimate is we'll probably get somewhere in the 6-7% range out of stocks. That's about the best we can come up with. It's very hard to say where the market's going to go in 1 year because other things happen that are not forecastable, right? We can look at monetary conditions. We've got an accommodative Fed right now. They're generally in a interest rate cutting mode. They are putting that on pause a little bit as the CPI numbers for January and December and November came in at the high end of expected ranges, and they're not really going down much. So that's concerning, but it's not like they're raising rates. Monetary conditions are probably the single most important ingredient in a 1-year forecast. So monetary conditions look pretty good. Fundamentally, earnings-wise, the market's at the high end of neutral valuation. Right now, the S&P is trading at about 20 times earnings if those earnings happen. So it's a little expensive. It's not cheap. We've seen 30 PE, so it could get a lot more expensive, but it's not a screaming bargain. And so we've got a muted forecast for equity returns this year. Think 6 or 7%. So that's half your portfolio. So if half your portfolio gives us 6%, that's 3 to the bottom line. The other half of the portfolio is in bonds. And this is where all the good news comes in. After a decade of 0 to 1% yields on these intermediate term investment grade bonds, we're now looking at 3.75, 4%, 4.25. It keeps bouncing around, right? It was up around 5. But the yields on intermediate term investment grade bonds right now, call it 4%. So then if we get 4% out of half the portfolio, that's 2. So 3 from the equities, 2 from the bonds, that's 5. That's much lower than we saw over the last 2 years. But in a low inflation environment, 5% is real growth. So muted returns, less out of the stock market, more out of the bond market. If the bonds are yielding 4% and interest rates don't change, the bonds will give us 4%. That's where I came up with that. If interest rates change, which they will, if they go down, we'll make 4% plus capital appreciation. If they go up, we'll make 4% minus capital appreciation. So, that's what we're looking at for the year 2025. Right now, a lot of volatility in the stock market. We're back up to all-time highs as of today after a very weak December and a really ugly January. January up until a few days ago. And it's been said the market hates uncertainty, and we've had nothing but uncertainty since early December. Once the election was decided, then we enter a phase of that everybody's calling policy fog. There were some insane statements coming out of the new administration, right? We're gonna buy Greenland or whatever. We've got to let all of that just sort of fall by the wayside and wait and see what types of policies start to get floated, what's more likely to be enacted, where's tax policy going to end up. These things are all going to matter to the economic output in the first, half of the year. So it's very hard to get your arms wrapped around that right now. That's probably the main reason for all the volatility we're seeing right now. So tough year to forecast until everything settles down and we start to see some real legislation. Like I said, less out of the stocks, more out of the bonds. So that's our outlook going forward. Any questions?
Less stocks or bonds.
What's that?
Redo's taking good notes for his retirement.
Yeah.
What's good for this is good for us, Yeah.
Well, I apologize for the low bandwidth. I would love to be able to see you on the screen, but I'm going to blame Marriott. I'm actually in Irvine, California, and I'm in a Marriott, and I guess I'm just not getting the bandwidth that I needed. So my apologies for that.
All right, good.
Thank you very
Sell
much.
your Marriott stock, right?
I didn't have questions about those specific comments. I just had the 2 general comments. First of all, I think it would be helpful to get this in advance so we could take a look at it beforehand. So maybe in the future iterations. And I think this is where I do my annual thing about divestment, climate divestment, which I supported in Santa Clara Valley Water District did about 12 years ago. Santa Clara County is considering it right now, actually, in the next month of the site, whether or not to divest. And I think our consultants have said they do not support that. I continue to think it's a good idea since I'm a short termer. It's gonna be up to you guys what you want to do about that. if the consultants don't want to do that, then we might need to have different consultants. I don't know if there's been any change in our consultant's opinion, but I just wanted to bring that back up.
Okay.
And by consultants, you mean?
Maybe-
PFM?
Yeah,
Maybe you'll pose it as a question and see if they could,
Sure. Dennis,
Because,
any thoughts on the divestment issue? Climate divestment?
Dennis, can you hear us?
Yeah, I didn't understand. You cut in and out a little bit. What is it that you're considering?
Having our portfolio to enact a climate divestment screen. No high carbon on it.
Oh, okay.
Yeah.
That's a question we get asked quite a bit, and it's a good thing to discuss. We do have the ability to apply all sorts of screens to the portfolio. Whether they're climate screens or DEI issues or ESG issues. The difficulty comes in the pools, because you're in a pool and we would have to assume that everybody in the pool had the same objectives. And then you get into the issues, and I haven't read much on this recently, but then you get into the issues of defining exactly what you're trying to accomplish. What exactly are the goals? And it's difficult to exclude or include companies that, while using mutual funds and ETFs, there are some mutual funds that are ESG funds, and they include climate concerns as well as many other concerns. So if you're just trying to accomplish screening for climate concerns, you're going to, by using those funds, you'll screen out a lot of other things, if that makes sense. Hiring practices, minority hiring, wages, lots of other social and governance issues. So that's always possible. Your costs do go up because those funds carry a higher expense ratio. Returns, in my experience, don't suffer a lot, but they are probably going to be a little less. And again, that's just my anecdotal experience. I have a university for which I manage a portfolio endowment. They are a church-sponsored university. ESG investing, which, by the way, means environmental, social, and governance. So ESG investing for them, we have used a couple of mutual funds that are designed that way, and the returns have been just slightly less than the benchmark. So not a big reduction in investment return, but noticeable, and one for which, as decision makers, we're all accountable. And so, again, it's good to talk about. It's good to look into. It's very difficult to actually pull it off in the portfolio. We can't do it in the pool, but you could do it in a separately standalone portfolio. Could be completely customized. It's easier to do with individual stocks and bonds. And at that point, our ESG portfolios are all individual stocks and bonds. At that point, your transaction costs are higher, your asset management fee is higher. So, those are some of the key talking points on that topic. I hope I've answered your question, or at least given you information to consider.
Well, thanks, Dennis. That's helpful. And it's a little bit more flexible than what I remembered regarding potential ways to do it through you. I am aware, as you mentioned, you do it somewhere else. a lot of places do this. They figured out how to do it. So again, it's up to, you might not be aware. of
Yeah,
this,
we can
Dennis,
do
I'm-
it. Yeah.
I am terming off this board next month, basically. So it's not up to me whether or not it'll be done. So I'm just discussing this for the potential interest of the other board members.
We'll still hear you.
I
I'm
appreciate
coming praying against you.
If I may, I think one of the things that we should look at is to see if there are other agencies who, because, our portfolio, given the report, I mean, did pretty good. I mean, we should be pretty happy with how it did. So when something is good, you think twice whether you start divesting into something else, which other agencies may have experienced. If they experience something which is really much better than what we have, of course we'll look at it. But if it did, marginally well or less, which is what I took to understand, then you think twice to let go of something that you have right now. That will be my take on that. I'm still thinking.
There is
Yeah.
an issue as to whether or not it's actually the purpose of the agency as a public agency, and these are our employees' money, rather than our money. Taking a political stance for them may not be the best position for us to be, certainly without discussing it with them. And I don't know whether there's an issue related to some agencies or charter agencies and some are not, that may affect their legal responsibilities. That may be something for Julie to look at. So I guess it would require a certain amount more study before we actually could venture that far.
I'll point out that it is one of the B priorities in our strategic plan, and we'll be going through the plan update process here in a couple of months, once we have a full board. And so if the board would like to discuss it further there and see if we wanna, adjust the priority.
So one quick clarification, when you were talking environment, you were not just talking environment, you're talking ESG, right?
I was talking about climate change and carbon screening. You could do an
Does it
ESG,
fall under ESG or?
it's a subset, yes.
Okay, all
So
right.
if you did ESG, you would cover that,
You covered that,
and you
okay.
cover other stuff,
All right,
which would be
Of course.
fine,
of course,
but,
yeah. Okay, so getting back to what Dennis was talking about earlier, I mean, we are in an arena where there's a lot of uncertainties at the beginning of this new administration, and everybody's kind of trying to look for the balance, process first before you go into something like this, so. But like, the general manager said, we're gonna have plenty of time to talk about it when we do meet for the plan review, right?
Yeah.
Yeah. And it's there, so we'll talk about it and we'll think about you.
thanks.
Okay,
Do you have any other conclusions? Do we have to do anything?
it's just a review.
There's a resolution,
Yeah.
which is approving the planned investment portfolio for 2025. And as I mentioned, it's written as we're continuing the same portfolio.
So the choices would be to change the mix from 50-50 to some other,
It's one of the other
Fraction.
options.
given how we've been doing it, I can't see a particular need to change, but position,
In the past, I've supported being a little more aggressive, but not with this administration.
right, yes.
the unknown.
Exactly, there you go.
So I'll leave to offer this resolution.
Certainly, I'd like to move resolution number 2025-01.
I second.
Okay,
Approve the plan investment portfolio for 2025, right? I'll
Yes.
second- I'll second that.
Yes,
Yes, okay,
Director Schmidt,
yes,
Vice President Bella,
yes,
President Wheeler.
yeah,
all right.
thank you for the presentation.
Good evening. Thank you for your time.
Thank you, Dennis.
Thank you. You're welcome.
You did everything you did for your retirement fund?
Didn't we normally get a printout beforehand of your slides? In the past?
We've brought it to finance committee in the past
Oh.
first. And, there's just been so much going on in so many meetings and there was uncertainty if they'd be available December.
Yeah. Okay.
You could have added with this.
You could have said it's somewhere in that file.
I, like,
Yeah,
Crappy cheese was.
It's
that
about
part
half a
should
ton right here.
be in that file.
It's in the packet, yeah.
Understand that it's a little hard to weed through it.
Okay,
A little.
let's see. So next we have,
It's not always like this, guys, all right?
we took item B off the list. We're going on to C. Revising the Mid-Peninsula Water District Financial Management Policy to add a section on escheatment.
Yep.
You're gonna have to explain that.
So yeah, last April, the district had adopted the financial management policy, which kind of got my mind thinking about other policies that we could adopt. Within our records, we have a number of outstanding checks. Some of them are, greater than 3 years old. Which made me think, why don't we just escheat it? So escheatment is basically the process by which a governmental agency can claim unclaimed property. So these checks that are greater than 3 years old, assuming you go through the proper publication process, based on the dollar value, or you follow the code, you can claim those monies and bring it back into the district. So for example, a check, we've got several checks here that are, let's say, more than $500 that are greater than 3 years old. We put in a publication into a newspaper that it has to be a newspaper within the boundaries of the district, saying, hey, we've got these checks, come claim it if it's yours. There is a claim form and we provide 60 days for somebody to claim it. We publish it twice, give them 60 days to come claim it. Nobody claims it, it becomes the property of the district. So in the policy, we went through and evaluated against the California Government Code, and there's four different ways you can just cheat property. So for property that's less than $100, you can just cheat it within 1 year. For the property that's less than $15, you don't have to publish it. Publish the information, right? It's $10, $10.81. A lot of these we'll see with refunded utility billings. That people said, well, this check is too small, I'm not gonna cash it, I'm not gonna waste my time cashing it, or however they're thinking about it. So there's no need to publish it. We do have to maintain records that we escheated it. Basically, just maintain that listing throughout time. But as long as we maintain those records, we can use those funds. Those funds go back into quote unquote the general fund, for the district, there's only one fund. For amounts that are greater than $15, less than a year, like between $15 and $100, it's greater than 1 year. We publish it for 2 weeks, wait 60 days, and, we're able to escheat it at that point. For amounts over $100, we have to wait 3 years, and then we can then we'll publish those amounts, that listing essentially. Wait the 60 days, and then it becomes property of the district. So this policy outlines points to the government code, and then outlines the procedures in which the district is going to do that to make sure it's a fair and equitable claim, when somebody brings it. And, you know, it's a fair and equitable procedure that we can escheat that property. So there have been, Kat came to me with, you know, she asked like, okay, I hate saying the word escheat. It's kind of awkward. I've seen it titled unclaimed properties or surplus property. So, you know, it can go, unclaimed property procedures is, you know, perfectly fine, of course, but, you know, within the statute, the government statute is called escheatment of property, so. There you go.
But the proper terminology in CPA terms is escheat, right?
You know, it's actually not even a CPA term, it's a government term, so it's a function of government law, so California law.
Okay, no question, yeah. So how much money are we talking about?
So currently we have, for this fiscal year, we have about $7,500 that we could claim back.
Nagging, okay.
Some of it is going to be hitting that 1 year, 3 year threshold throughout the rest of the fiscal year. There is a listing of checks that we have already in the staff report.
Mhm.
So 4,832, we could essentially claim. Now we're within 60 days. That is greater than 3 years that we can publish. And then we have an additional $667 that's greater than 1 year, but less than $100 that we can, again, publish or just immediately claim for that,
Yeah.
you know, less than $50.
And what happens if somebody comes in, gonna come lately after all of this stuff that we're doing? And they say, oh, by the way, I never received that check. That you said you sent me, that, it's not that I didn't have time to go check a $10 check, but I never received it.
So that's why we've got the publication process, and then within our policy, we've also set kind of ground rules that, or reminders anyway, that we'll, before we escheat these property, we will send them a letter to the last known address to say, hey, there's this check outstanding with your name on it. Do you want to claim it, essentially? It's not a required letter, so if we don't send it, we can still escheat the property, but
What
we
what
are
I'm
doing our
imagining
due
is for
diligence.
this kind of money, which is little, you know,
Yeah.
but it's nagging to be there, you know?
yeah,
It's that old person on fixed income.
Yeah.
And we're going to take away $15 from them, so seriously, come on.
yeah,
Which is
and that's why
so-
we would send a letter
Yeah,
out, and
it's
that's why we
bizarre,
would
you know,
publish it.
To do that, you
Yeah.
know,
Uh-huh.
so, yeah, I mean, if we have those, and why wouldn't we send the letter ahead of time, say, you know what?
Yeah, that's what the
And
policy
you,
states is that
you
we'll.
save
we'll send
all
a
of
letter
that
to-
stuff and publication and newspapers. Just on, hey, you know, there's a check outstanding that you haven't cashed.
Yeah.
That's what people say to me sometimes, if I take longer to deposit, because most normal people, they want to balance their checkbook.
Yeah,
And they go, no, you haven't cashed that check. Yes, I know, I'll go, you know, whatever, you know. And we'll do the same thing to these people, because chances are that many of them are refunds of something, and
majority of them are
seriously, I
refunds.
don't want that money back. I seriously don't.
Yeah.
So I don't know how you guys feel about that, you know,
One of the questions that I had was, how much is it going to cost to put an ad in the newspapers? I remember it from looking for employees. It's not cheap.
Yeah,
So
that's-
it could be $100 to put an ad in the paper for a $50 check.
That's it. Yeah.
So, you know, how does that work?
yeah, I mean, that is a balancing act. I think your ad in the paper would list everything at once, so it
Yes.
wouldn't be just
Yes.
each individual one. I mean, it doesn't issue the requirement that we need to post it in the newspaper, that's just a government code requirement. But we will also, have a web page where we'll list it. So if you like Google your name and it, pops up that, hey, we owe you $15 or $15.71, whatever. It'll come up. Coastside County Water District recently, or a few years ago, passed a almost, exact same policy, and they have a website up, which you can just Google and look at as an example, so we'll follow that example. But yeah, I mean, this is, if we look at it and in a given year, the amount we would receive is way,
Are we talking about 100 cases?
No, I think we're talking about like maybe 25, 30 cases. I think maximum you would
Yeah.
see maybe $1,500 up to $2,000 per year. It's just this year, we've had this growing list of outstanding checks. That, at this point, we're at about 7,200. We started just kind of doing our due diligence.
Yeah, which is
research.
good, we appreciate that. I think if I would be, I think I will go for the low hanging fruit.
Yeah.
Which means send them a notice and you
Yeah.
probably get rid of half of them.
I have some comments. I can see you chatting on, so I will clarify some of that there. But, the other thing is, we don't have to do this every year.
No.
So if we're not gonna get very much money, it's gonna cost too much to put it in the newspaper, we can wait a few years, let it add up, go through the process. So it's actually, worth the time.
Yeah, but if you wait a long time, those that would have been as cheated after 1 year, and now it's 4 years later, I mean, they basically have no recourse at all. It was way too long now,
So
So the IRS comes after 7 years, right?
Yeah, so we're gonna continue monitoring the list to send out notices on a more proactive basis.
Because that's the cheapest way to reach these people.
Yeah, so if we
And
can
it-
reach
it's
them
good.
before it hits the newspaper,
Yeah,
then.
yeah, and it's good PR too for us, In
Yeah.
other words, we're telling people, hey, we're trying to be honest with you. We owe you this much money. This money is yours or ours. Come get it, or,
One of them on the list is the city of Belmont.
Well, yeah, so,
those no.
No.
yeah. So on that point, I saw, or heard Rena and Juba chatting. So in looking at this list, we did notice, hey, not all of these are customers. These are vendors, including ongoing vendors that we use all the time. So we said,
Right.
oh my gosh, did we not pay these bills? Is it not tracked on the accounting? So we did the research and looked into them. And so the vendor ones actually should have been voided checks that were never actually voided in our system. So the accounts are clear, everything was paid up, but in case of like Zoom, a check was cut, but it was also paid by the credit card because we were switching to credit card payments. Maybe the check wasn't even sent, but it was never actually voided in Springbrook. So there's a little cleanup, it's highlighting a change in our, our practices, so we're gonna do a closer review of this, and this is, for both the refunds, but also, anything with our vendors to make sure that we're on top of it.
So when you look at, after all the cleanup, it looks like it's pretty much gonna be the utility billing refunds.
And we will add that point in the minutes, so that if anyone comes and says, City of Belmont, we never got this. Well, no, these were
Yeah.
checks that should have been voided and will tomorrow morning be voided in the system.
Yes.
Yeah, I don't have a problem with the policy per se, it is more the concept that we're going to do a whole lot of work and spend money in order to
Yeah.
avoid check to get that small amount of money. So I think it's bad enough we have to do it in-house in terms of man hours or employee time.
I don't know if you've ever noticed, but on the state controller's website, there's an unclaimed properties website. That if you search your name, private companies have to send their achievements to them with your name on it, and you can look up to see if you've got any unclaimed, like insurance recoveries, or like I found a couple myself a few years ago. and-
$25.
Yeah. I got a couple $100.
Really?
I never received this check.
I got a card from the state about that. And
Yeah.
it's like, oh, they want me to fill in this 3-page form for $25.
Forget it.
It's like, really? Yeah. So, okay. Do you have any comments on the language of the policy?
Do whatever is administratively
Yeah.
easiest. And
So based on the discussion, do you think that we need to change anything or the reso basically covers what we're talking about?
I think the reso has, or the policy itself has enough discretion that, we'll make the judgment each year. And it will, just to clarify, it will go into the existing financial management policy as a new section, 5.12, so.
Right. Okay,
Very good.
can we have a motion?
Yes. I'll move to approve resolution 2025-03. I like to say that word, so approving appointments of new board members, no, not that one. 2025.02, revising the Mid-Peninsula Water District financial and add section 5.2 as cheatment, I like to say that. Policy for unclaimed money.
And I'll second.
Vice President Bella,
Cheatment. Yes.
Director Schmidt,
Yes.
President Wheeler,
Yes. Okay, thank you. It took longer than I thought. But, you know, I expected. Oh, water supply assessments. The big package.
The meat of the meeting.
Okay, so you want to start, or you want Drew to start, or?
I can give a brief introduction. So, we have prepared 2 water supply assessments for the specific plans, which fortunately are happening at the same time with the city of Belmont and the city of St. Carlos, convenient for us. And Drew has prepared a really thorough PowerPoint. It is very thorough because, you know, there's a lot of uncertainties in these assumptions, both on the demand side, supply side, everything. So it's meant to really share those assumptions and the implications with everyone. If, because this is, you know, going to be a long meeting, if you all are good on a particular topic, don't hesitate to say if you want to move it along. Drew won't be heartbroken. But it, you know, they're complicated assessments and complicated assumptions, so we just wanted to, you know, share them all. So we'll move over. Great. To Drew.
Okay, thanks, Matt. So yeah, I put together a basically slide deck going through broad overview and then some of the fine grained details about how the assessment is conducted and some of the assumptions that went into the calculations and then overall like conclusions. So yeah, you just go next slide. Yeah, so just kind of broad overview, right? Water supply assessments, they were enacted in California in 2002. They're part of the CEQA process, and basically the point of them is to determine the availability of supplies for the district and the project for which the water supply assessment being conducted over a 20-year planning horizon. The water supply assessments are required for certain types of projects over a certain size threshold listed here. Basically these are, like I said, required for different size projects, including specific plans. So if we can go to the next slide here. So as Guy mentioned, the 2 water supply assessments we've prepared recently are for the Belmont Harbor Industrial Area specific plan that covers City of Belmont and the San Carlos Northeast specific plan. So you can see them there, they're abutting each other. So next slide. Basically, just to kind of give a general idea of what a specific plan is, right? These are essentially planning documents covering a specific area of a city, whether it's, a downtown area, sometimes a special district, master plan communities, things like that, basically to guide the types of developments that happen in those areas. They usually entail something like rezoning or other like land use designation changes, if maybe there weren't any at all, or changes to the land use. Basically to help guide and structure the types of developments that could happen in those areas. And usually what they don't include are specific actual developments as part of that plan. So it's basically saying, here's how much of this certain type of land use can happen in this specific area. and, basically allowing for and structuring the types of developments, rather than specifying actual specific developments. So next slide. So to get more specific on the two specific plans that we prepared WCA's for, as I mentioned, one, the HIA specific plan, it's currently in unincorporated San Mateo County area. As part of the specific plan, it will be annexed into the city of Belmont. So basically just referring to as, this is the Belmont specific plan here. Roughly 62 acres covering the harbor industrial area. And it'll allow for approximately 3.7 million square feet of non-residential uses and approximately 700 residential uses, including a multifamily and then the existing mobile home park. For the Northeast area specific plan covering which is located in city of San Carlos, roughly 2.5 times the size of the Belmont one, covering about 4.5 million square feet of non-residential area, and roughly 2,000 multi-resident family residential units. Something to note here is that this specific plan will be served partially by Cal Water, the San Carlos district neighboring us. You can kind of see here, just a small area in the corner here is being served by Cal Water, the rest of it is being served by Mid-Pen. Currently, there is a building moratorium in this area of the city, and that's basically on hold until the specific plan is finished and published. They both have the same plan horizon out through 2045 is where they are, envisioning the growth for the developments. Okay, next slide. So to get into, what we're most concerned about, right, which is the water demand. Basically, water demands for these projects were estimated using land use type information provided to us by the respective cities, and calculated using water demand factors either developed in-house by us from a demand factor memo. I think I presented on that a few mornings ago. That was a memo that we had developed internally to basically determine water consumption with various land use types based on our own consumption data. For land use areas that we didn't have a lot of data for in-house, we looked at various other sources like published master plans, other cities that had developed similar demand factor studies, as well as like federal sources. After determining the demand for those specific land use types, we also looked at the incremental increase in demand in these areas over the existing water demand that was already occurring. Basically, to make sure that we're not double counting water demand, right? Both of these areas are pretty well developed already. So any additional, development happening in these areas, would be in the incremental demand that we're looking at here. So yeah, basically just ensuring that we're not double counting demand there. I think it's important to note that the demand estimates here are necessarily conservative, right? Because these are specific plans and because we don't have, knowledge of specific developments that are happening here, we basically have to assume the reasonably highest use of water for these areas in order to, basically assure we're accounting for everything that could possibly happen. So demand estimates are necessarily conservative, for that reason. Another thing to note here is that, both specific plans are assuming the maximum building heights within those specific zoning areas. And that's a nuance there because particularly with the San Carlos specific plan, to go over certain height requirements would require additional fees that would need to be paid to the city, as well as some other requirements. So yeah, I think it's important to know that we are, again, assuming the maximum amount of development here. Whether or not that's realistic, is kind of like that's the game we're playing here of like we need to assume this high maximum demand. Whether or not that's realistic is kind of a different story. So okay, so next slide here, just to walk through how the demand is actually calculated. Calculations themselves are relatively straightforward. Basically, just take the land use square footage or dwelling units for residential uses for each of the land use types, so commercial, retail, office, life sciences, restaurant, et cetera. And then next slide, multiply those by the demand factors that I discussed, either from our own sources or from the outside literature values. To then, next slide, get the total water demand for each of those land use categories. As I mentioned, the WSAs look out for a 20-year planning horizon, so out to 2045, and we looked at 5-year increments for the water demand. And since both project specific plans have a 20-year plan horizon, full build out, full demand is realized by 2045. Then, as I mentioned, we remove the existing demands to make sure we're not, double counting. So next slide. And then slide after that, we also looked at demands that were basically accounted for in the 2020 Urban Water Management Plan. So essentially that exercise was looking at, for the Urban Water Management Plans, there's an expected amount of growth that is, reasonably assumed within the district service area. Some of that growth could be reasonably assumed to be occurring in the specific plans. So basically we're saying, that growth that was already accounted for in the Urban Water Management Plan can be, taken up, in other words, by these specific plans. So after accounting for that demand as well, we get the total net new demand for the district. So next slide there is off the bottom there. So that's the total net demand that these projects are going to be having on the district. So, and then next slide is just, just to go back one, that was for the Harbor Industrial Area Specific Plan. And this slide here is showing for the San Carlos one, the Northeast Area Specific Plan. Okay, so next slide here, and I don't have any questions, by the way, and if you can just kind of let me know as I go through things. I just wanted to stop briefly if there are any questions so far.
How firm is the HI or the Belmont estimate for these life science projects?
Yeah, that's a great question.
That seems to be driving 90% of the increase in water demand over existing conditions.
Yeah, as we'll go, I'm going to be going into detail, but specifically about the life sciences calculations and numbers. So
Okay.
yeah, I'll be getting to that soon.
Okay.
But yeah, it's a great
Thank you.
question. Yeah, so apart from the specific plan demands that we assessed, basically WCAs are also required to look at any other known developments that are going on within the district. So as part of this exercise for these WSAs, we also looked at other developments that we have been aware of since the publication of the Urban Water Management Plan. So basically this is just listing all the known developments that are happening that were also accounted for in this in both of these WSAs. So we have a couple of additional water supply systems that were completed in 2022 and other water service agreements and other WSA that have been approved in the district. So basically just showing you, these are all the other known developments that we know about that we're accounting for in this total demand increase picture. Okay, so next slide here. Okay, so yeah, so these tables are essentially pulled from the water supply assessments, looking at the supply, demand, reliability picture, basically. So looking at the cumulative demands from the specific plans and other known developments, basically seeing sufficient supplies through 2035, and then water supply shortfalls of 1.4% in 2040 and 7.4% in 2045. This is under normal year, like non-drought conditions. Next slide. Under single dry scenarios, and I'll get into this a lot slide later. Maybe I should have reorganized it, but we basically have two different supply scenarios with and without adoption of the Bay Delta Plan amendment. For now, just know that there's a lot of uncertainty with that adoption of that plan amendment. So we basically are forced to look at two different scenarios. This is similar to how the Urban Water Management Plan approached the supply outlook for the district. But basically with adoption of the Bay Delta plan, looking at shortfalls up to 62% in single dry years. Without it, it's basically the same as normal year conditions, up to 7.4%. And the next slide, similar exercise was done with the multi-dry year scenario. So basically droughts that extend for multiple years, up to 5-year droughts. With adoption of the Bay Delta plan, look at 68% shortfalls in 2045. And then without adoption, up to 37% in 2045. Okay, so next slide here. As Kat mentioned, there are a ton of uncertainties and assumptions in a lot of these numbers that were included in this analysis to arrive to these percentages and demands. So I think the first and foremost, as I kind of alluded to with these specific plans, these are looking at basically zoning change and maximum requirements for these areas rather than actual specific developments. So, in calculating those demands, what we're saying is this is the maximum amount of demand that's possible within these land use types, rather than saying this is what's going to be built here in the next 20 years. So I think it's, a very important distinction saying that, in these other known WSAs that we've prepared, these are actual specific developments that have, planned timelines, and some of which have already been constructed. Specific plans are a much different kind of look in just saying, yeah, like I said, this is the maximum amount of development that could happen in this area. Regarding the district demand projections, currently we're undergoing our demand assessment for the 2025 urban water management plan. If you're not aware, that plan is updated every 5 years, and among many other things, looks at demand forecasts in 20-year planning horizon for the district. So that plan will be looking at demands up through 2050. Cool. And so, yeah, so that's currently underway, and the demand for that urban water management plan will be based off of current baseline conditions. And what we're showing here basically is that, the demands projected in each of our urban water management plans dating back to 2010 far exceeded what the actual demands were for that year. So if we're looking at, say, the 2010 urban water management plan, they projected, roughly, 1,400 million gallons a year in 2015. Actuals were more like, 850 or something like that. So, and that trend kind of continues for each of these urban water management plans. The projected demands were quite a bit higher than the actual demands that we saw in that year from our actual, consumption data. So I think, it's important to remember that the demands for our district that were included in these WSAs are, fairly conservative numbers. And I think, necessarily so, but it is, important to note that, say looking at in our 2020 overall management plan through 2025, we're projecting, 1,044 million gallons. The actual use will probably be more like, 830 or something near there. So that's like a 213 million gallon difference there in demand.
So we already know the baseline we're using for the urban water management plan projections is 200 million gallons higher than what it really is right now. And, we're not the only agency that looks like this. Over, back in the consulting days, we've done these charts for many, many agencies, and every single one looks like this. The urban water management plans being a planning document, always very conservative. You always, and the timing, if you look at the demand, you see, 2010 and 2015 both happened mid-drought. So you always think, well, obviously, next year demand's gonna go right up to where it was and take off from there. But really, it never fully rebounds and it just keeps going down. So this is it.
So, since these are projections and uncertainties, the way the graph looks the same for different agencies, is it because they use like the same safety factor? Why, how does it come out the same way?
I
And if we do, what is that
Yeah.
usually, like
so
5%, 8%, you know, what?
I don't, well, so it's not necessarily a safety factor. I think it's largely driven by your baseline and then the assumption that, or how much you assume people are gonna continue to conserve. I mean, there's a lot of things driving conservation, and I think people don't wanna overly assume everyone's going to get more efficient. And then they do. And a drought happens and more people take out their lawns and change their practices and change their toilets and fix leaks and rates go up and people fix leaks faster and all of these things. And so, you know, this isn't gonna go on forever. Eventually, we've got a plateau. But this is common, you know, the Bosque agencies, we all do a collective demand study. Bosque hires a consultant. This will be the first year in, I think, every cycle since we started urban water management plans where we're using a new consultant, Hazen and Sawyer, to do it. Before they used Madaus. Not every agency, Cal Water in particular, they go through the process with Bosque, but then they use their own study. But you know, we've worked with agencies and we're in Sonoma, looks the same, agencies in LA, Orange County, same thing. It's just the nature of being conservative and
Conservative. Yeah.
Well, yeah, absolutely, we need to be, yeah.
If you're going to spend 10 years planning for new capacity, you better be planning conservatively.
Yeah. But to the point that was brought up earlier about the life sciences, you know, I have my doubts about how strong they're gonna continue. I think they're heading to a brick wall.
Yeah,
Not,
that's
not too distant future either.
a good
It
segue.
cannot sustain, you know, so.
Yeah,
If we're not there already.
right. We can jump into
We
those.
might be there, we don't know it yet, right?
Well, that's what they're saying is that there's a lot of buildings they've converted to
Right.
sciences are built as life sciences that are sitting empty right now.
Yeah, I mean,
So these specific plans are allowing for development, but it feels.
but for us,
Like crystal
that's how we
ball.
project, we have to project that way, you know, so.
Yeah, so let's go to the next slide here. This kind of segues right into what these next slides are talking about here. For one, I guess before we get into that, you know, in general, our demand predictions, as I mentioned, are necessarily conservative. One of which is the outdoor landscaping calculations. Basically, those demands were estimated using the maximum applied water allowance. This is basically the max amount of water that outdoor landscape can use in the state of California. This was I think 2015. It's part of the WILO process. But essentially, from what I've seen from all of our landscaping projects that we've received, you know, all of them use something that's much lower than the MAWA, the maximum applied water allowance. So, you know, again, since we don't know specifically what's going to be happening on these projects, we have to assume conservative, but what's most likely is that, you know, that outdoor water use is going to be quite a bit lower. Talking about life sciences, right? So, you know, there are a few elements here, one of which specifically with the Belmont specific plan, they define that land use as office park land use types. So basically you're thinking these large campuses that have the capacity or potential to be used for life sciences, but nothing specific has been, you know, claimed or planned for those buildings or those areas. So, you know, because those facilities and those, you know, that land use can allow for that kind of high intensity use, we have to include it in this planning. But, you know, as we're saying, there's a lot of uncertainty about what those areas are actually going to be used for.
And if I could add,
Mhm.
even within life sciences, there's such a huge
Yeah.
range in water use. You could have a life sciences development that really is largely office and, you know, very low water use kind of labs. Or you can have something that's actually, you know, growing things on molds and just has a tremendous amount of, you know, manufacturing use and water use. The demand factor use is based on Genentech, an actual Genentech campus in San Francisco that has a mix of manufacturing and lab and office use.
Mhm.
And it is quite high, quite a Do you recall the demand factor for office?
Yeah, it's like 0.0, it would be 45 gallons per 1,000 square feet compared to 180, so quite a bit higher for the life sciences.
0.04 per square foot.
Yeah, 0.045, yeah, per square foot, yeah. Yeah, so quite a bit higher with the life sciences compared to office use. So yeah, if you go to the next slide.
Actually, to make
Yes,
sure I
of course.
understand, is this saying it could be office park that's totally unrelated to life sciences? Or is it some life science thing that might do office park as well?
Yeah, it's basically, what they refer to as office park, which could allow for life sciences, but could be totally, unrelated. Could just be like large office buildings or some other use type.
An accounting firm could take over a place.
Right, exactly. Yeah, so it could be any other things, but it's allowing for that kind of use, so that's why we're using this, very conservative demand factor. So yeah, so next slide, just kind of digging in more deeply. Looking at the split of the life sciences versus the other uses for the specific plans. Currently, life sciences, if we're looking at both of them, takes up about 65% of the total water demand for these projects. Which is about 305 million gallons a year for this assumption. And so if just as kind of an experiment, if we go to the next slide, if we cut that use in half, say 50% of that office or life sciences use was actually just office space, the demands would go down by 115 million gallons, so, and reduce basically 22%. And this would actually put us below our ISG and normal year situation. So even just by cutting that number in half, which, I would say is like pretty reasonable, right? If some of these life sciences are just half office, half lab use, lab/manufacturing, just realistic, the demand for these projects go way up and underneath our normal year supply ISG. So just to go a little bit further for the next slide, if that split was like 20/80, so even 20% was life sciences, 80% office, demands will go down by almost 200 million gallons, and quite a bit further below our ISG. So kind of just illustrating the point that, there is so much uncertainty with this life science demand use, and, the reality of this water demand could be much different than what we have to assume for these water supply assessments.
And, just to highlight, like, this sensitivity analysis still assumes that 100% of the area is just redeveloped with more office space. There's still, as we've been going to HIA lunches every month, sure feels like a lot of those owners don't want to develop anytime soon. So will they redevelop at all in the 20-year horizon?
And they've had those for many, many years, and
Yeah.
it's still the same, yeah.
So that's another big unknown that we're not even, assuming in this analysis.
Yeah, but then again, we also know the age of those owners. So pretty soon, somebody else is gonna come and say, what do I need this warehouse for? Out the door it goes, and it's gonna go for development, so.
Okay, next slide. Okay, so talking more about uncertainties, right? Now kind of looked at demand uncertainties. This slide is really talking about supply uncertainties, right? So as I mentioned before with the State Delta Plan Amendment, basically this is amendment, I think it was acted 2018, but essentially states that during dry years, so during a drought, the SFPUC would reduce their basically allowed water use for urban water suppliers. And for the district would reduce our water use, our water supplies by as much as 54%, even without any specific plans or any other development on top of what was in the urban water management plan. So this is, basically something that all SFPUC customers are dealing with and facing, and is existing, without either these specific plans or any other future developments. So, the status of the BDP is very uncertain at the moment. It's been going on for a number of years, and in the urban water management plan, we had to do a lot of basically speculation saying this, if it's adopted, would result in these, shortfalls during dry years. If not, it would be X, right? And so, basically, we looked at 3 different scenarios in the water supply assessment with adoption of the Bay Delta Plan, without it, and a 3rd scenario, which basically implementation of the voluntary agreement. This is an ongoing, basically negotiation with member SMPC, BOSCA, and other member agencies to figure out something that would work for everyone, that wouldn't result in 50% cutbacks for all urban water suppliers that get water from SMPC. So that, as I said, is currently ongoing. There are no hard set numbers for what that would look like in terms of our available supply. The expectation it would be closer to our level of service goals that are stated in the contract. That would say, they guarantee limited supply reductions less than 20%. So that's the expectation, but again, like I said, that's really ongoing, and probably will be for the next urban water management plan. So it'll still be a lot of like, this may happen, is it unrealistic? Probably unrealistic, but we just don't know what specifically that's gonna look like. So
I know I've talked about the Bay Delta Plan Amendment quite a bit, but just because we have some guests here. So, it's a real challenge because the Bay Delta Plan Amendment is law. It has been adopted, it is state law. It's also not self-implementing, and the state has not developed a plan for implementation yet. There are legal challenges for our portion of the San Joaquin, the other rivers as well, a little farther ahead in the process. So the first part of the case that was decided in favor of the state against us as urban users, but there's also a lot of ag users that we're all party of this. And so it is currently being appealed. They do believe that the strongest argument on appeal is that the state did not consider urban water users. They did not look at the urban water management plan. So, you have 26 agencies, including and San Francisco, who said this is going to be a massive impact on urban water use. And the state didn't look at that. And the judge, focused most of his comments on that issue. So, we'll see what happens with the court case. At the same time, there's the voluntary agreement process, which has since been rebranded by the state as the Healthy Rivers and Streams
I think
Initiative.
so, yeah.
Which Newsom has come out many times very publicly, been very strong support of, is pushing it. And it's, so basically it's saying there are other ways to solve the ecological problems than just reducing stream flows. You can do a lot of habitat rehabilitation that will help the fish and bugs and bunnies and everything way more than just cutting flows. So, massive amount of research and studies going into all of this. And so even though they're still negotiating the agreement, our site, San Francisco, Mid-Peninsula Irrigation District, Tuolumne Irrigation District, they've actually started investing in those projects already. So they're doing the habitat restoration projects right now, marching along, hoping the voluntary agreements are the way we land. And, crystal ball hopefully says that's where we'll land. But it's a challenge because state law says we will have massive shortfalls.
So in addition to Bay Delta Plan uncertainties, there's also a lot of efforts by other BOSCA member agencies to develop alternative supply sources. Basically things like recycled water projects, filter reuse, and for some agencies developing groundwater supplies. All of which basically helps our situation. Ultimately, if these other agencies get more local supplies, that helps lower the burden from SFPC purchases. So this is something that's ongoing for a lot of agencies right now, and basically benefits all of us when those are developed. Next slide. So just to kind of sum up here, right? In terms of the uncertainties facing both of these WSAs, for the demands, we use a lot of conservative demand factors, a lot of uncertainty with what is actually going to be, built or allowed for some of these land use areas. Even within those areas for life sciences, just a lot of certainty about what types of, intensity of water use is going to be occurring if they get built at all, right? And, of course, the timeline of any of these speculative developments is really unknown at this point too, right? We're assuming, like a linear growth within the build-out phase, 20-year planning horizon, but it's really unclear when any of these developments could start to come online. And something else to mention here, which I haven't talked about much, is the non-functional turf demand reduction that will be occurring. Basically, there's as part of state law, a ban on irrigating non-functional turf within basically all urban water suppliers.
For commercial users.
Sorry,
For commercial.
for commercial CAI, commercial industrial institutional users. Basically, this would mean a lot of outdoor areas like medians and other properties owned by either commercial properties or local government agencies would be restricted for watering those areas, basically leading to a pretty sizable reduction in water demand in district. That number hasn't been calculated, and that's something that I'm looking at in terms of how much area there is in the district. But that's some uncertainty there in terms of what demand will look like. That starts to be enacted in 2027. So that's when that will start to, we'll see the effects of that. But anyway, that's something that's ongoing. That will potentially lower demand for us. In terms of supply, we kind of went over the Bay Delta plan uncertainties, and other supply development by policy agencies. Okay, so next slide here. Basically, with all this said, we know there are a lot of uncertainties, but going forward, the agency or the district is doing a lot of tracking of water demands. Within our service area. Every new, connection is obviously being tracked and like known about within the district service area. Every large WSA goes on over the same process, right, of re-looking at water demands within the district for 20-year planning horizon. The urban water management plan is updated every 5 years. So again, that's another fresh look at water demands going forward, accounting for all the new development and planned future development. So, there's a lot of ongoing, assessment of water demands within the district, much beyond just these two WSAs. And I mentioned here about the non-functional turf ban. Okay, so next slide. So essentially, say worst case scenario, or I guess you call worst case scenario, but all these demands are fully realized, as we mentioned in these both of these water supply assessments. There's a number of levers and basically knobs that this can turn and enact to control water demand within the district. One of which being the water shortage contingency plan. This is part of the urban water management plan. Essentially, details 6 stages of water shortages. And demand reduction actions that we could take in order to reduce demand and ensure that we have available adequate supplies. There's a whole suite of actions that we can take, and ranging from restricting outdoor irrigation to like full-blown moratoriums. Right? So there's a broad range of actions that the district can take to deal with water demand if we see that there's going to be an issue in available supplies. Let's see, in terms of, there's another action that the district could look into, kind of demand offset policies. This is something that other agencies have enacted, given some uncertainties and, getting closer to ISG, basically requiring new development to pay a demand offset fee, which basically is, X dollar per acre feet of water use that the project is expecting would get paid to the district that would go into either developing alternative water supplies, different demand reduction actions and that sort of thing. So that's something that other agencies have already implemented. That is basically a way to account for that increased demand and help bolster their supplies.
I thought we had that.
We have demand fees basically for new development.
Yeah, we have capacity charges, that where new developments pay into the additional capacity they're gonna charge. This, so the example here, Cal Water actually has a demand neutral policy that says, so our demand offset fees aren't, they're calculated based on connections and whatnot, but the demand neutral literally says you cannot increase the demand on the system at all. You can go implement your own projects to conserve water on your site. You can reuse water on your site. You could pay for some other project within the system to reduce their water use to offset the demand, or you could pay money into a fund that we'll use to create new water. So it's different, it's more aggressive.
Thought we had something in addition to capacity charges.
There is, during a declared drought, there are additional charges on new connections during a declared drought.
But during normal times, there is nothing except capacity charges.
Yeah.
For the others.
That's right.
Okay.
But, and there are other parts of the state that have kind of hit these supply constraints sooner than we have, that kind of have, various templates where they've.
And the capacity charges will be based on new development,
New
correct?
development, yes.
Yeah, that's the idea, is the demand offset for new development, adding.
The Redwood City project, the salt. The
Cargill.
salt factory area development project was proposing capacity fees
Okay.
for their units in order to create new sources for Redwood City.
Which one, the one at the very end?
The one that's where the old salt pond used to be.
Well, the old salt pond comes all the way to Leslie,
No,
the
not
one
the-
that used to be
not the-
Leslie Salt?
Not the pond, but the actual production facility
Oh.
down in Redwood City Harbor.
Yeah, I know what.
So there's 1,200 acres there that they were proposing. Some of it would be dedicated to new marshland. But they were looking at creating new sources of water for Redwood City in order to make up for their increased demand.
Correct.
Another even more aggressive example even is, city of Brisbane and the Baylands development there, where if the Baylands development is built, it would do something like triple the demand,
Or,
on Brisbane.
yeah.
And so their
Brisbane is
policy
all-
is,
It's all residential.
I
On the
mean,
hill, and then on the lowlands, it's all high rise.
they don't have the water for that.
Yeah.
So their policy is you can develop if you bring new water, period. You have to find new water and bring it into development. So,
Well, mhm.
that's the purpose of planning, right? We're looking ahead, we're constantly reassessing, we're evaluating all of these uncertainties and seeing, squinting through like when we think it's a problem, or going to be a problem with enough time to be proactive,
Exactly.
these types of tools.
Very good.
Just to list a couple other tools we have in our toolbox, the Pure Peninsula project that we are involved with, as well as Redwood City and San Mateo, a few other agencies. Basically looking at indirect potable or direct potable use project that would bring in up to 12 million gallons a day of new water supply for. So that's something that's ongoing and being explored by us as well as some other agencies. There's also, on-site reuse requirements that we could enact, similar to what San Francisco is doing, basically requiring new developments to have on-site recycled water systems. So that's something that we could explore if that's something, that seems necessary at the time. And then I mentioned that the non-functional term. So, so next slide. So yeah, to basically just kind of sum this up, as I mentioned, a lot of uncertainties in terms of what this demand outlook is actually going to be for these two specific plans. I think, the main take home here is that, these demands are very maximum, conservative potential water demand from these two projects and not actual, demands that we think are for sure gonna happen through, the next 20 years. We're constantly assessing our water demands, on an ongoing basis, both from new water supply sets we get and from the development management plan. So, I think that the feeling is that right now, and even with these two specific plans, the water supply situation is not an issue, and that if it becomes one, then we can start implementing some of those tools that we mentioned to help, get ahead of it and, well ahead of any potential, water supply situations. Basically, the conclusion is that, we recommend the board to adopt both these resolutions for the water supply assessments. That's all I got.
And then just kind of my, too long didn't read summary of all this. I don't like these numbers. Nobody likes looking at these numbers, but they don't keep me up at night. They just tell me we need to watch and monitor and plan ahead. So I pay attention to them, but I don't worry about them.
Because.
Because we have tools, because we're on top of it. We're proactive. And we have a long planning horizon and.
Any questions, Brian?
Yeah, I got a couple.
That's why.
So I remember when we got the water supply assessment a couple of years ago for those projects in this area, which was an outside consulting firm that did it, not in-house. And this is so much better, a process for understanding that. That was a black box. I didn't really know how they figured out what they did. So this has been really, really helpful. So I do
Those
appreciate
consultants.
it. That's right. Who are those people? I agree with almost everything everyone said about why it's not likely not to be as bad as we're looking at in some of these figures. There are two on the other hand, one of which this is a 20-year projection. I could feel almost 100% certain on it, something like this is not gonna happen in the next 5 or 10 years. I don't know what's gonna be like in 20 years. I'm working in the energy field right now, and AI is changing everything in terms of energy consumption. Coal plants that were scheduled to be shut down are staying open. They're reopened 3 Mile Island in Dakota College.
That's right.
So
Yeah.
things can change.
It's not gonna be enough.
5 years ago, you wouldn't have predicted that for energy, so I don't know. And the other thing is however, we might think, yeah, it probably won't be as bad as this. We're asked to take this on face value. That's what we're approving right now. We approve that. And there's some bad stuff in here. So I feel like, and it's really good that it's saying, here's where it could go. And it could be wrong, and we're laying it out. And that will go into the analysis that the city should do. What I did say to Kat was I felt that the conclusion in the two WSAs does not reflect some of that bad stuff. And that's something that I would think that presumably they're gonna do EIRs in those two cities, and that's what they would look at. I thought some reference to the worst case scenarios should be in the conclusions. So that was my thought. I don't know, Kat, if Drew had a chance to see it. I came up with a proposed sentence, but do you want to react to that? What do you want to do?
So first on the point of the EIR, yes, this is, the WSA is part of the EIR process. So it should be an appendix, and there should be some summary in the main EIR document as well. So we have the language here, and I did share it with Drew as well, and I know Julie, you probably have had a chance to look at it by this point. I'll read it here, just to add this to the conclusion. Note the implementation of the water shortage contingency plan under scenario 1 could involve a 68% use reduction in multiple dry years in 2045, with this project and other known projects comprising a major component of the shortfall, see table 9. And depending, and that is, that's accurate. I would, depending where it gets put in the text, might be worth reiterating that all of that, if the Bay Delta plan is implemented as written and all development is realized. Because again, those are very large assumptions. So I guess the question is, Or would you like that added or something similar or different? How do you feel? Yeah, if you go to the first kind of intro of both, and it's basically the same language in both documents.
Just page 72.
Yeah, 72.
Or page 46, depending which number you're using.
Yeah, yeah.
And then again, for
Right at the beginning,
the San Carlos.
into the intro.
So I was suggesting adding the sentence that Kat read at the end of that bolded sentence on page 72. And I'd be fine with the additional sentence that Kat was suggesting appended to that. The one other thing I will add to that is, if I were at those cities, I would say, this means this project could have significant impact. We'd register that as a potentially significant impact and potentially require mitigations.
Could.
That's up to them, that's not up to us.
No, it's
That-
not up
but,
to us.
And they may come to that
Exactly, I was gonna
conclusion
say-
with or without it.
Yeah.
And
Yeah, they could dive into the doc and find that, because this is just a restatement, what's in the document, and come up with this. I'm just suggesting we should surface this in the most visible component of the
Now,
mistake.
we will have an opportunity to comment on the final EIR.
For the draft EIR,
Or
yeah.
the draft EIR, over and above what this document, but an actual comment that would allow that type of discussion to go forward.
Yeah, but if that's the case, then Kurt, wouldn't you rather say it now?
I have no objection to saying it now,
Yeah,
but, we have very limited control in this whole
Yes.
thing.
exactly.
We are
Yeah.
providing an opinion, a planning document. Our only recourse would be if we felt that it was a potentially significant and unmitigated impact would be to sue
Right,
over the EIR.
right, which is.
And given the fact that it's all based on scenario one being really bad, it's hard to justify that at this point in time.
Where I would say, what the heck is going on with these cities is they looked at this document and they said, there's no impact, there's no water impact from these projects. I'd be mad, frankly. I don't know if I would sue, but I'd be mad.
Yeah.
So, and if they do say there's impacts, then they can consider mitigations, which I think is in our interest for the cities to consider mitigations on these specific plans. It would also set up the stage to do all these things that Drew is saying we could do if we think we're in trouble. And trouble could, this year, what's going on this year? This could be started with multi-year. So, for that reason, I also said to Kat, I don't think this is wrong as is. I think this fits legal defensibility, but I think it would be improved by highlighting to our city partners. There's some issues out there that we're wrestling with in this, and that we have not said will not happen. If we said that these worst case scenarios wouldn't happen, they should not be in this water supply assessment. Therefore, we're saying there's a chance this could happen.
So how would we proceed?
Well, this is a draft report. Have staff suggest what that page should look like, and so on. We are adopting the code.
Yeah, so I was gonna say,
We can
Julie-
adopt it as amended.
yeah, and I think that's right, and Julie, correct me certainly if we're wrong, but if we take that language and work it here, or just add it, I guess, at the end of the bolded part, I
Okay,
think
let me
that
ask
reads
this,
fine.
what kind of time frame do we have for this?
They wanted.
The city's
wanted
want
it.
now, yeah.
Huh?
They wanted them sooner. There was a bit of a delay because, and I probably should have mentioned this as well. Because a portion of the San Carlos plan area is also served by Cal Water, even though it's a teeny tiny portion that doesn't fit the,
Mhm.
requirement. You can't break up a project that way, so they had to do a WSA, Cal Water had to do a WSA for their teeny tiny little bit of the project as well, and they had a lot of delays getting started. So we weren't comfortable adopting ours until we had all the coordination with them worked out to make sure nobody's double counting. And then also City of Belmont changed their numbers on us, like the middle or end of December. So again, because the two documents speak to each other and have the same exact numbers for the other plan,
Yeah,
we needed to also hold off
the
on
reason
that,
I'm
so,
saying this is
but
that,
they want them done.
correct, yeah, but the reason I'm saying this is because, I mean, you're hearing an opinion of the three of us here. It will be nice to have, Matt's opinion too as well. Although when we hear Matt, we won't hear Brian anymore, which is not.
You've heard him.
We heard him already, okay.
done.
And, but, that's why I asked about the timeframe, so. And you could maybe, take another stab at it yourself, I mean, you've seen these reports before, many times.
Written many of
Yeah.
them.
So,
Yeah.
yeah, so even you yourself, Andrew, will probably, understand where we're coming from too, so.
Yeah, I will point out that, by law, the water supplier has, I think it's 90 days to complete a WSA from when it's requested, way past that. But the cities understand why, and, we've been communicating with them obviously all along of why it's everyone's, interest to make sure we take the time to do it, right?
So 90 days?
Way past,
It's way past?
way past.
Yes.
Oh,
But again,
okay, so,
if the
It
cities are
started
complaining, it's
last-
okay, if they're
It
not.
started in June or something.
Yeah.
We're.
Ridiculous.
okay, so that doesn't even count.
Well, they couldn't define the project until October or something,
Yeah,
and they
yeah.
changed it.
And they understand why, you don't want one city's document saying one thing and then, you change your analysis a little bit in the other one and then, and then you have to somehow revise the other one.
Mhm.
That doesn't help anyone, so.
Right.
We've been very in constant communication with them this whole time.
I guess I would prefer to insert those two sentences. I would actually create a new paragraph after that bold section, and just sort of say,
Those two sentences.
It's not a done deal. That's what we.
Scenario one raises significant issues if it actually is implemented as law, as defined in law. Because we can't ask our residents to reduce their water demand by 60% and expect them to actually do it without
68%.
And the other point that, we didn't elaborate on, but is true, by our contract with San Francisco, they can never turn off the tap on us. It's just that in a shortage situation, if you go over your allocation, that water gets more expensive. At a cost to be determined at the time of the actual shortage, so who knows what that is. So it's, of course, we don't want to go there, everyone wants to be a good
Exactly.
steward.
That's what
But
I want
that's
to avoid,
another piece.
to be in that position.
Right, and we don't want to be getting the level 6
No.
of our drought management plan.
I think it's worth noting too, that under scenario one, even without either of these specific plans, we're still looking at 54% or something like that, 56, I think it was, percent, water shortage. So, even then, okay, yeah, that is like, roughly 10-12% difference, but we're still looking at over half, asking customers to cut their water use in half, even without either of these projects. So I think, highlight the point that this issue is really surrounding the Bay Delta plan amendment rather than specifically the impacts of the two specific plans on the district, which I think is important to note.
Would you rather see it come back? Because next month you may be all 5 here.
No, we would still be, we would be full.
Why?
He's gonna be here.
I'll
No,
still
he's
be,
not.
No,
except for that one item, right?
no, because
No, we'll
we
be-
cannot appoint the next person until
We'll
you
be
have resigned.
5, because
So I thought there was a question, you resign before the February meeting, and then we appoint at the February meeting.
Okay, what, sure, I thought it was, well, whatever it needs. I'll do it.
So
so we potentially. could
we
be
would have
5.
4.
No,
We would have
we
4,
would be 5 in March.
by
appoint
March. Although the 5th will be out of the country for that meeting, so.
Okay, so wait a second, so in February, Matt will be back.
Yeah.
And John will be seated, right?
So it'll be
Yes.
4.
But Brian's
No,
seat will be vacant,
Why?
because he needs to vacate before we appoint the replacement.
And we have.
I know, I tried, Julie wouldn't let me. I tried to make it a little bit more streamlined, but
So if Chuck is not gonna be around, can we appoint towards the end of the meeting? And he will recuse himself at the end of the meeting.
I'll resign.
Yeah. he will
resign the
that.
meeting.
It will
Getting
be fine.
creative, Julie.
And the appointment will be the last item on the agenda, and Chuck won't mind, because he won't be here anyway.
Yeah, you could do that.
I'll have to be ready to write very quickly.
Storm out. Yeah. Just don't break your foot.
Exactly.
Yeah. Okay,
Okay, we'll let the city know, and we'll take a look and have some revised language.
yeah, because otherwise we're going to wrestle on that language, and we're gonna be here for
Yeah.
about 2 hours to wrestle about that language.
Yeah. Yeah,
And,
it would be
And
nice to have-
and knowing you, I know that you're going to want it to be perfect. The
and
words have to be,
No,
you know.
I will.
Julie wants it first. The rest of us just want it to work.
I'll also see if I can get some of Matt's time before, to
Yeah.
give him the presentation, so if he has any questions. so we can hopefully
Exactly, yeah,
streamline
yeah,
the
yeah,
discussions.
yeah.
Or just tell him to watch the video.
Yeah, and
Yeah,
also
he has a
he
comment.
needs to sign this anyway, so he's gonna have to come here and catch him while he's here.
So
No, but seriously,
Okay.
this is,
we'll bring it back.
I mean, this is gonna be something that's going to govern us for a long time, and it deserves.
Yeah.
All our
Well,
attention.
Yes and no, because once we do the urban water management plan, we'll kind of wash out all these assumptions and reassess demands as part of that, and then that becomes our new baseline. Any new water supply assessments going forward, refer back to that urban water management plan. It's just this constant flow of assessing and reassessing. And
Job security.
For the consultants, but we stopped hiring the consultants.
Right, so we start on the 2025 urban water management plan this year and
Yep.
finish it sometime next year.
Summer 2026 is when it's due to the state. So
So we're gonna hold on to all of this, right?
Hold on to the PowerPoint presentation.
Right.
Might get clicked off.
all right. Drew, are you ready for the next item, or you want to take a break?
Sure, let's go, let's keep rolling.
Yeah, you know.
That sounds a little
Might
short
as
as well.
Anyone else need a break or not? No, okay,
So I'll sit for this one.
let's see. Yeah. Okay. First quarter water conservation staff report.
Okay, yeah, so basically, the main focus of this part is looking at the urban water use objectives and some upcoming tasks and do items related to that. Just as some reminder, refresher background, in 2018, the Making Conservation Top Runway Life was passed California, which among many other things led to urban water suppliers required to meet certain urban water use objectives. Basically, these are different categories of our water use that we need to adhere to and basically control to make sure that we're meeting certain water use budgets with different use types. So this includes outdoor residential water use, indoor residential use, outdoor CII use, as well as water loss. So each of these categories have specific, basically objectives that we need to meet. And within those are a bunch of requirements that we need to do in order to make sure we're meeting the budgets and fulfill all those objective requirements. So basically I've outlined a couple of items that upcoming that we need to basically do to make sure that we're in compliance with the objectives. So the first one is basically QAQC and the DWR land data. So land data stands for landscape area measurement data. Basically what this is a GIS data set that DWR produced that classifies various aspects of our water districts, mainly the outdoor landscaping areas. Among other things, what this data is used for is to calculate our outdoor residential water use budget. So basically, the data set has classified on a map all the different outdoor residential areas, right? Residential lawns and that sort of thing that are irrigated. And that area measurement is used to calculate our overall outdoor water use budget. So basically the task at hand is to basically look at that data set in QAQC to make sure that it's accurate. Speaking for myself, someone who does a lot of GIS analysis has dealt with large GIS data sets, especially when you're looking at something at the statewide level, there's a lot of room for error in that classification data set. So basically it would be a task of, looking at our district service area, basically polygon by polygon, making sure that they've classified both the extent and haven't, misclassified certain areas as residential when they actually aren't, or vice versa. This would include, basically, GIS analysis, looking at Google Maps and Google Earth, but as well as just site visits, seeing, if there's some areas that are questionable. Okay, does this area make sense? Is this actual residential, outdoor irrigated area or not? So, like I said, combination of field site visits and some GIS analysis to make sure that those areas are accurate.
Quick question, are they looking at all types of irrigation or just spray irrigation?
It's all types, yeah.
So you're gonna try and identify who has drip irrigation on their plants in the backyard?
Well, no, I don't think it's separated by irrigation type. It's just basically any outdoor lawn areas that has the potential to be irrigated. So I think it's mostly looking at these residential properties and identifying those yard areas that are not, just on the property of the house, but that exist, say between the street and the home area, and basically QAQC in that data set. Make sure, so it's not specific identifying types of irrigation, it's just whether it
So
has
you're looking
potential.
at turf, not
Yeah.
all types of landscape.
It actually looks at a couple types, right? So it identifies turf, it identifies like trees, and then they have irrigable, not irrigated, so something that could be irrigated in the future, and then it calculates it all different ways.
Mhm.
And one, just to kind of one really clear illustration of how uncertain it is you're looking at aerial photos from above. You have a tree on your yard. What's under that tree? Is it all irrigated grass? Is it dirt? Is it other native landscaping? Who knows? So it makes assumptions. The state has made assumptions.
Mhm.
So
It
and
depends.
scale that up across the whole service area, and you got a lot of assumptions.
Yeah,
The process of cleaning up that data, make sure it's as accurate as possible, and with the ultimate goal of making sure our landscape area measurement that's used in our water budget is accurate, so that we're representing our outdoor residential water use appropriately. It's also an ongoing thing, so as new residential developments get built, making sure that those areas are captured and appropriately updated in our budget calculations. So that's kind of first step there, another element of this is it's called the CAI DIM outdoor water budget. Basically, it just an acronym hell here with all these, but CAI is a commercial industrial or institutional, right? So all non-residential commercial accounts. DIM stands for dedicated irrigation meters. So basically, what this objective is getting at is assessing the amount of water that's used for the outdoor commercial landscapes. But as part of this, what we need to do is determine how many commercial properties have dedicated irrigation meters, so they have a separate meter for their outdoor landscaping versus just their indoor use. Or which accounts have mixed use meters, which is the MUM, the MUMs. And basically take action on those accounts that have mixed use meters. I'm kind of getting ahead of myself, so there's sort of three steps for this water budget area. The first step is a classification effort, which I think is going to be a lot more intensive. Essentially, as part of this objectives framework, it required water agencies to classify all of their commercial accounts using these 22 different water use classifications. So things like basic retail, office use, restaurants, water parks and car washes, that sort of thing. All of our accounts need to be assigned each of these classifications. So, we have roughly 530 commercial accounts within our service area. So it'll basically be a process of going through each of our accounts and determining, which land use type they are and assigning a classification type to those. I think it gets tricky when we get into the weeds about how specifically to assign these classifications and to make sure that they are accurate going forward. So I've been working with Misty, who's our, admin supervisor, to figure out the best process to do that, to basically make sure we're tracking the classes accurately, but also that if, say, there's a new account, something's swapping out, that we are updating them appropriately so that the data is up to date and accurate. So that's something I'm working with Misty on, and figuring out the best process and workflow for that. And I think ultimately we'll probably end up creating some sort of workflow document that we can give to folks who are in charge of, accepting new accounts to make sure that those classes are updated and accurate. This is something that's due by middle of 2027. So like I said, I've been working with Missy now and something that we'll be implementing, pretty soon this year in the future. Thankfully, we only have 530 accounts. It's actually not that much effort to just go through each one and say, okay, what does this do? What does that do? Some of these larger agencies have a lot more heavy headache of an effort. So in any case, it'll be just kind of manual effort and then setting up the process going forward once the baseline classes have been set. Second item here is like I was mentioning before, identifying all the CI MUMs. So all of our commercial accounts that have meters that are serving both outdoor irrigation and indoor uses. Basically, the first step is just identify all of those accounts that have that situation, and just to specify, these only apply for accounts whose outdoor areas are greater than half an acre. So this is something that I could, be assessing using GIS and also, field visits to, determine which of these accounts that applies to, and basically just tally and figure out how many accounts that we have in this case. The third step, which applies to this, just scroll down a bit, is basically implementing BNPs or taking action on those accounts. So we basically have two options. There's either we can convert those mixed use meters to DIMs, to dedicated irrigation meters, or implement best management practices for those accounts to ensure that they're using water efficiently for their outdoor water use. So this is, as you see here, the compliance deadline is pretty far in the future for in terms of when we actually need to comply. I think it's definitely important to start thinking about it now and figuring out what our process is going to be. Because there could be a lot of issues with either side, right? Either converting meters to a DIM, you know, could be pretty costly and might have a lot of logistical issues in terms of like whatever kind of, you know, system they had on that property, could be very difficult to convert those meters. But also from the BMP side, you know, there's a lot of you know, concern in terms of, okay, we have this BMP, we want to implement, how do we ensure that the customer is, you know, actually applying or, you know, take advantage of that program. So anyway, that's something that once we get the mums identified, that we'll be looking into in terms of, yeah, how best to manage those accounts. I'm not expecting to have very many, all of these like mum issues, but it's really hard to say at this point. And, yeah, anyway, that's something that's gonna be ongoing and looking at in the future. Yeah, so that's status update on the objectives. Let's see, going into just brief update on our WELO projects. So far in this fiscal year, we've had 24 water efficient landscape ordinance projects. Of those, 3 of them have been are currently pre-approved, 9 are in progress. We've completed 5 of them and 7 were exempt from our ordinance. In terms of rebates, not too much action going on this year for our rebate programs. We've just had 1 long be gone. There's 1 currently underway. 1 rain barrel rebate, and then 5 of our ratio smart eviction controllers have been snagged up. So, yes, that's all I got. Thanks.
Questions? No? Good. Question? That's good. Good. Thank you.
Thanks.
Okay. Bosco update.
Okay, that's me. All right, so the Bosco meeting was on January 16th. And the agenda included the items that are important to continuing successful operation of the agency, including, which is usually happen on the first meeting of the calendar year, the election of officers for Bosco, and the meeting of the Regional Finance Authority, and I explained a little bit later on that. We also looked at the mid-year work plan and budget review, and the planning session for board members' input on the development of the results achieved in fiscal year 2025-26. So special order of the business, the board, in their infinite wisdom, unanimously elected a chair, with Tom Chambers. And I don't know why, but they elected yours truly as the vice chair for the year 2025. And then we reconvened for the Regional Finance Authority. And the meeting of the RFA, Regional Finance Authority Board of Directors, convened during a break of the Bosco board. And the Regional Finance Authority Board took the following action, again unanimously elected Tom Chambers as the chair, and Louisville as the vice chair for calendar year 2025, approved the January 18, 2024 meeting minutes, and adopted the fiscal year 2024-25. So the Regional Finance Authority, which is also part of the Bosco, we meet once a year. We meet only once a year. During the Bosco meeting, we recess and then we reconvene on the Regional Finance Authority on January of each year. And this continues to be an important entity that needs to be in place because of the critical role it has in ensuring, should there ever be a need, that financing capability is available to fund actions necessary to protect and improve the reliability of the regional water system. The RFA provides Bosco and the water users it represents an important backstop to ensuring a reliable supply of high quality water at a fair price. That's the purpose of the RFA. Then we had the SFPUC report by Steve Ritchie. The Assistant General Manager for Water Enterprise provided the water supply update, reporting that total system storage is at 79% storage. So we're good as far as the storage is concerned. However, like what happened last year and the year before that, rain came in October or November, or maybe a little bit the first part of December, and January was dry. 3 years in a row, exactly the same way. And same thing this year. January is just totally dry. So the precipitation data is average and the snowpack is currently below average, and I'm sure Rena is going to expound on that. Then we have the consent calendar action, and usually we do, most of the items are the same, like we affirm the minutes from the November board meeting, the budget status, investment report, bond surcharge, and reimbursement report, something like that. And then the action for 2024-25 mid-year work plan budget and general reserve review. We went through that. The board adopted the recommended changes for fiscal year 24-25. And then the CEO gave a report. And it consisted of the water resource engineering. You know, the assuring?
Yeah.
Again? Provided an update on BOSCA's long-term reliability water supply strategy for strategy 2050, which includes also desal and alternative water supplies and things like that. Then the BOSCA water resource manager, Tom Francis, reported on the status of the tier 2 plan and the WSA amendment action, which we have discussed there in many occasions, and I'm sure Kat is looking at me, she's gonna be talking about that too later on. And then the discussion item for the budget planning session to begin the process of developing the fiscal year 2025-2026, like most agencies are doing. And the board was provided a table showing the identified short and mid and long-term challenges that should be considered by BOSCA between now and the upcoming fiscal year. As part of the planning session, board members provided comments and feedback to the CEO for his consideration in the work plan and budget preparations. And then we had the proclamation honoring Nicole Sankula. We presented her with a proclamation, and a lot of people said a lot of nice things about Nicole. And which, by the way, she served on the BOSCA from September 2013 till December 2024. And that was basically, the next meeting is gonna be on March 20th, coming up. And that's it. And Kat, I don't know if you wanna expound more on the tier 2 or?
I don't have a lot, I mean, that was what the last water managers meeting was focused on. It was actually a short water managers meeting, which is rare. But I think it has a little bit to do with Tom getting his feet under him. But the update on that is that
What, did
BOSCA,
Tom conduct the meeting?
yeah,
I'm okay.
so,
Tom is the new CEO of BOSCA, Tom Schmeichel.
so BOSCA plans to provide us with information to support the adoption of the tier 2 and number just quantity actions in about mid-February. They're gonna give us, draft resos and staff reports and everything and PowerPoints and make it very easy. So they've been saying that for a little while, so I'm planning on bringing it to you all at the March meeting. So hopefully we can get those done, and it'll be the end of a lot of work, so. Related to that, I mean, it was a transmission from BOSCA or via BOSCA from SFPUC that we received yesterday, and it's in my report. We got what they call their range letter on their water rates. And what they are saying is the range of increase for the next fiscal year will be between $5.72 per unit to $5.99 per unit, or an increase from 0.9, anywhere from 0.9 to 5.6%, which exceeds the number they previously gave us, exceeds what's in our rate study by, a smallish amount, by 13 cents. But that's all fine because we do have a pass-through mechanism. So if they go with the high end of the range or even above, we just pass that through directly. So we'll be looking at that, as we're doing our budget, as we talked about, we'll be looking at, what we want to set our rates at for July 1 within the approved study, so
It'll change before that.
it's always above what they tell us every time,
It'll change.
so, yeah.
But
And,
at least gives us something to think about, yeah.
Yeah.
Good.
so that's the latest.
All right. Good, thank you.
Then I'll report on the regional water system conditions.
Yeah, sure, absolutely. Let's go to the next slide, Allison. So the California slide. So really what I did is I got this slide up and I compared it to last month. And what I noticed is kind of what we saw is that the drought area in Southern California kind of grew.
Yes.
And in Northern California didn't. If you remember, we had some rain in Northern California, and Southern California hasn't had any measurable rain in months. And that's what you're gonna see in the next table, which has rainfall in California, different parts of the state. And of course, that's why they're saying the conditions are just ripe for Southern
Yeah.
California to have these wildfires.
Right.
So that the drought is increasing in Southern California. It's kind
They
of
may have
slowly.
some rain over the weekend.
They may
they
have
said.
some rain over the weekend, which is gonna
Hopefully.
cause other problems with potential mudslides,
Yes.
and debris flows, so
Yeah,
they're
yeah.
anticipating or planning for that, but, at least from a drought perspective, the drought, area, the colors that start in yellow and increasingly get more, droughty, increased a little bit between November and December. And so if you go to the next slide, which is the reservoir situation, this is actually not looking too bad at all, right? Typically in the wintertime, we want to have some capacity in the reservoir, so when the snow starts melting in the spring and the summer, it's got room to fill up the reservoir. So, the reservoirs I typically share with the board are the ones in the upper left, the Shasta and the Oroville, and they're looking pretty good. The green line you see going through all of those bar charts there is the historical level at that particular date, and this happens to be January 5th, 2025. So for Shasta, that green bar there, that's a historical level for Shasta on a January 5th, 2020 or something like that, right? But anyways, so basically, it's actually above that right now. They got more water in there than they typically have in there. So that's not a bad thing. Contrast that with Dom Pedro, and we know, and so for the new board members that come in, Chuck and Joanne, Dom Pedro is a reservoir where San Francisco can park some of their water that comes out of the Tuolumne system. They call it their water bank, and they can hold 570,000 acre feet, so almost a quarter of the capacity of that reservoir. It holds a little over 2 million acre feet of water in it. And so to me, where I'm seeing that one is kind of at its historical level. I think part of it is because we also know that San Francisco right now, they're doing maintenance work on the tunnel from Hetch Hetchy all the way to Dom Pedro, the hilly part. And so they're not letting any water flow through the tunnel, right? So I think that's why probably Dom Pedro isn't a little bit higher, kind of like the other reservoirs. But that's okay. There's still plenty of room. And when they get done, the water's gonna flow from that tunnel into Dom Pedro. And then one of the last ones I always like to point to is the San Luis Reservoir, because if you drive 152 and Interstate 5, you see that huge reservoir there, where they come together. And again, even that reservoir is kind of where it normally is this time of the year historically. So that's not a bad thing. But what we're just not seeing is just a lot of rain, right? So if we go to the next slide, it's just rainfall over some of the cities out of a database that I pull. I pull some here from the Northern California, Central California, Southern California. So that the first column in there, you see the rainfall between July 1 to January 5th. And you see downtown San Francisco had almost 10.5 inches of rain, where down in Palm Springs, they had 0.08 of an inch of rain, right? And then you kind of slide over to the green, orange colored part of the chart. And that was last year around the same time, right? So if you look at San Francisco last year at that same time, about a year ago, they had about 7.25 inches of rain. So this year we had about 3 inches more rain, in that same time period. Contrast that with the Southern California, again, Palm Springs. They had almost 4 inches of rain last year, right? And this year they had 0.08. You remember in the fall of 2023, there was a monsoonal that came through Southern California and literally dumped almost a year's supply of rainfall over that part of the state. in just one event, right? And this year, you know, that same period of time, you just haven't had any rain. You know, you combine that with, you're gonna see this other USA map, and it's that fire potential map, and you guys have seen it, but these other folks will get to see it, and you'll just see that they were predicting the chances of fire were pretty good for Southern California that already part of January and actually came to fruition, you know, because of the conditions, the humidity and stuff like that, drought. So anyways, it's been a pretty dry winter, a pretty dry January. I think Louis, you caught that. Hetch Hetchy, you know, where our water supply comes from, the watershed up there. The rainfall up there, Hetch Hetchy, just kind of tracking along the 30-year median for it, you know. And so even though we haven't had a lot of rain up until December, you know, between November and December, we had some rain events that kind of, you know, kind of kept that line going, but it's been a pretty dry January. The next slide just showing the rainfall up there in a bar form instead of the line. And you can just kind of see that, you know, we had good amounts of rain in November and December. The January, and again, granted, this is only the first few days of January. I just don't know if there's been a lot more rain in there. It'll be interesting to see when I pull up this chart again in early February, how much rain actually fell in January, because right now it's like 0.6 of an inch of rain for January. But again, that was early January. The next slide is snowpack in the upcountry. And again, the snowpack is kind of tracking along the historical median, which isn't bad, but you know, it's pales in comparison to where it was in 2023, right? Which is that purple huge line. And then the next one is the Bay Area precipitation. Again, a really wet November, December, and the first few days of January, just nothing. And you know, we haven't seen much rain, so I just don't see that one changing too much unless, you know, we get some rain here. And they're predicting some rain later on, I think next week. So we'll see. But I don't hear it's a big storm, you know, like we had. So I think January for the Bay Area is going to be pretty dry. So here's the precipitation map, and this is from NOAA. And Brian, I found, or I copied just some information about where this stuff comes from, just because you asked a question last month, and I'll talk a little bit about it. But anyways, this is the precipitation outlook for the nation. And it shows California having equal chances of being dry or wet, right? And it just depends where you're at. You know, in Northern California, maybe a little bit more wet, but Southern California, you know, probably abnormally dry. But compare it with other parts of the country. I mean, that part of Texas, the Panhandle, they're in an extreme drought condition right now, so it's pretty bad. And then up above in the state of Washington, they're getting the rain. They're getting their share of rain. The next slide, temperature, kind of the same thing for California. We have equal chances of being kind of warm or cool. It's been kind of cool this week, but last week it wasn't that bad, you know. So it's been a mix. It hasn't been too bad a winter, other than being maybe a little bit dry. And so here's this sheet, Brian, that I called her, and it's a part of where I get these slides. It's a climate prediction center. It's out of NOAA. It just talks about where they got the data and how they're using it. It's part of their climate prediction center information that they put out. But I just, you know, I just thought I'd share it in case you know, you wanted to look at it and you thought it was interesting.
Thank you.
Yeah, the next one is the fire potential. Now, this one, like I said, I thought it was interesting because I took this chart off of this website on January 6th, which was a Monday, right? And the fires broke out, I think, that Thursday. And so they were predicting, then you see this down below, it's a significant fire potential. Right below it says valid for Thursday, January 9th, 2025, and that's when these fires took off. So, I mean, you know, the conditions and the information that these.
Expecting the Santa Ana, that's why.
Yeah, they were expecting the Santa Anas, and you can see them kind of, you know, showing the conditions for risk in Arizona and Utah and parts of Nevada, and then in Southern California, it came to fruition. The combination of the lack of rain, low humidity, and those dry Santa Ana winds just created a mess down there. The next one is just a little bit of information of where this comes from. It's not NOAA, it's somebody else, but it's just all about trying to help people predict where there are potentials for fire, so that other people can use it for planning purposes. I imagine, you know, fire departments, you know, whether it's Cal OES or Cal Fire and cities try and use this information to kind of help them plan for, right? The next slide is just the total deliveries through the end of calendar year 24 in the regional water system. And, you know, it's just interesting, and Steve Ritchie was pointing this out at the WMR, is that, you know, or maybe I might have been Allison Castelo, but anyways, that very last, week, it seems like the water use throughout the entire region just kind of gets down to right around 140 million gallons per day. It's just been getting down there every year the last, several years. So that's just kind of interesting. And so you go to the next slide and it's for us right here in Belmont, and we're kind of like the same thing, right? We get down to the end of the year, the water consumption by our customers is very similar, it's just not it drops down to the lowest point in the year type thing, and it just all kind of gathers down right around the same amount of water.
Does it look like there's a big jump the next week in first week in January?
It can be, and again, it just depends on, what's happening, right? It's been dry. I mean, I know last week at my home, I turned on some water outside because it just hadn't gotten any rain, and I could see my plants were stressing outside, So people might be doing those types of things, just see a little bit of water because it's just been dry. There's just been no
Just to
rain.
keep them going.
Just
So
to keep
hopefully
trying to
that's
keep them
right.
going. Yeah. And then the last slide is just a cumulative graph. So this is for entire of 2024. It's just interesting. Drew had shown in one of his charts that in 2024, I think we used a little over 840 million gallons of water. The 1,125,000 units of water, that's that green line at the very top equates to 841 million gallons of water. So what Drew had in there is, exactly what we're seeing. And compared to last year in 2023, we pulled 807 million gallons of water. And I think some of that was probably because the early part of 2024, whatever, was kind of wet. But anyway, so this just kind of shares, where we ended up, and it's kind of tracking along with some of the stuff, even the urban water management plan. We're kind of predicting that we're going to be using a lot of water, but actually it just seems like, and it just hasn't been as much that the customers in the community kind of understand the importance of, water efficiency and water conservation, and we're seeing it because it just seems like every year that final number at the very top of that line just kind of keeps dropping down a little bit. I mean, we're below the 5-year average by almost 65,000 CCF. It's quite a bit of water. The only graph I didn't have, or Tina didn't have, was when you had a list about the reservoir capacities. I don't know why I left it out, but I left it out. But I do remember it's about 79% full.
79%,
Yeah, I
yeah.
won't forget that next month,
Yeah,
because that's always good to show to where all the water reservoirs, how we're sitting.
Capacity.
So we're sitting pretty good. So that's the story in the water supply. Not too bad, but we sure could use some rain and hope we get some snow the next week or so. And they're kind of predicting that, but we'll know until we get there.
Okay. Moving on to 9, management reports. Treasurer. James?
Right. You're ready, this is a long one. No. I hope not.
That's always bad.
I hope that jolt woke everybody up a little bit. So we're, as of December 31st, we're of course 50% of the way through. Water capacity charges, we're actually trending at about 59% of what our budget is. So that's not even taking into consideration that any rate increases or anything like that. So we were trending a little bit above where we were expecting. So overall, let me just pull this up real quick. So overall, we, the water commodity charge is about $730,000 more than what it was this time last year. We're about 59%. Water system capacity charges, as I mentioned last month, we're $807,000 more than last year because we received that one development payment. And last year we didn't receive any, so it just kind of matches up. The other significant changes related to our significant variances with the budget is we're at about 50% total for salaries and benefits. We are ahead of last year by 345,000, but we're still turning just a little bit lower than what we than where we're expecting, just barely. So I mean, I think our budget estimates were pretty close to being right on. And then finally, we made a debt service payment for the COPs this year for December for both principal and interest of $701,000. So that's already been posted. So then our next debt service payment is gonna be in May, thank you. First, I had to count 6 months out from December. Which will be about 330,000 of just purely interest. So that's kind of the next big thing that's coming up for related to the COPs. As far as cash and investments, we are down about $1.2 million. But our accounts receivable is also up. So that just means we haven't been collecting this quickly. And that just, that could just be a function of, it was the holidays and people just, I'm gonna pay for my presents first before paying my water bill, so. So our overall net position, we're $43.6 million, of which 14.5 million is not captured by capital assets. And then continuing on into the capital budget piece, we've made some vehicle purchases, so we got three more new vehicles, the F-150 and two F.
Well, we get the two Mavericks and then
That's what it
the
was, yeah.
F-150 and the F-450.
Yes. So we've begun spending those monies for the trucks. And then just some pay-go expenditures for various capital projects. And then finally, some really good news with the reserves. When we're looking at the capital reserves, we've been slowly increasing the capital reserve piece. So I think when we first started doing these reserve analysis at the beginning of the fiscal year, we were about 75%. And now, as of December 31st, we're at 98.8%. So I fully expect by next month, we'll be at 100% and start being able to fund the rate stabilization reserve, which we have set at $1.2 million. So great news. So.
Fund it before I leave.
But the skin of our teeth. So yeah, overall trending in the right directions.
Okay. District engineer.
Well, I know when the meeting's running long, when my laptop starts running out of batteries. Yeah, yeah. So we always conflict because if he's doing good, I'm not doing my job of spending your money. Right, because that's where money should go, right? Reinvest it. So if we're putting a lot of money in reserves, that means we're not building stuff. So we're sort of taking a little bit of a breather after that massive Old County Road project that just wrapped up about 2 months ago. But we do have a couple of projects in the works. The Harbor Boulevard water main improvements, we were actually thinking that we were gonna go in there and do the fixes next week. We ended up doing them this week. The schedule worked out. So due to the time when I wrote this report versus when we were actually able to get out there, we ended up getting out there this week and doing the majority of the work. It's on pause now. And then we're gonna go back and finish it up early part of next week. So we should be all wrapped up on that portion and then close that project out. So everything else on that project is closed out. The DLNO water main design, we are on our 4th project manager with a consultant on that project. It's been a bit challenging getting the final plans and specs from them and getting it all wrapped up. I think we're on the 3rd iteration of 100% plans, but we're very close. I know you heard me say that last time, but we're closer than we were last month. But so as soon as we get it to a point where I feel comfortable authorizing it to go out to bid, I'm hoping next month we'll be going out to bid. And then it's a 3-month period for advertisement and getting bids and so forth. And we'll come back to the board for authorization to go out to construction. That is a budgeted item, so I'm really hoping to spend some of that money this fiscal year. So that's good. A couple other things that are not on there, but I'm going to add them moving forward is we're reviewing a lot of city projects, and we have quarterly meetings with the city, and we do a lot of outreach, and we try to work with them on trying to get ahead of their projects as far as coordination goes. But we still get surprises, you know, as far as like projects that's kind of being dumped on us and even though we, you know, I think we mentioned a project in City Hall, the parking lot of the City Hall project, so we're still working on that. There is a sewer project that we reviewed. The first time we saw it was that they called it 60%, but then they called it 90%. But the project was very well along before we actually got to see it. That's a pretty big deal because sewer and water don't get along very well, right? We want separation, we want protection and those kind of things. So we're working through that. I'll put it on here so we have some ways to be able to speak with the board as far as our coordination with the city. So we had a really good call, I would say, yesterday with the city and their design engineer on that. And we're working through areas where they need to ask for variance from us because there's less than 10 feet of separation between the sewer and the water where they're going in with the sewer. We've had, I think we reported this out last month, but we had a conversation both with San Carlos and City of Belmont Fire marshals. And Ken, I didn't see it in your report. Is it okay if I mention that here?
Yeah, definitely. I feel like I might have included it last month, but maybe not.
Let me just repeat it because of the fires down in Southern California. I think it's prudent,
No,
but
it was not. I would remember it. It was not.
Maybe we missed it.
okay, well, let me just say that with all the specific plan and the planning and everything that's going on with the water supply that we just spent 2 hours looking at, I think we'd like to step back and look at the infrastructure, right? Okay, so all these life science buildings are going in, all the stuff is going on. Do we have the infrastructure to be able to provide water to these buildings? The answer is yes. You know, what we design for or what we look for is fire, right? That's what governs, because somebody taking a shower or domestic usage is minimal compared to when a fire happens and the demand on the system when fire hydrants are opened. So we wanted to talk with the fire department to see if based on these usages coming in, if there are requirements for fire, how they fight the fire and the water that they need changes. Right now, we're designed to 1,500 gallons per minute. And that water at 20 PSI residual and that water to be available for 2 hours. So that's what our modeling and when we analyze our system, that's what we look at as a minimum. A lot of the area down here in the flatland, we're able to provide upwards of 3,000 GPM because of how our system is set up and so it's way more than the minimum. But we wanted to know from the fire department, hey, is that 1,500 going up to 2,500 or 2,000? You know, just what are you forecasting? What are you looking at? So the short answer is they said that 1,500 is fine. That's what we're sticking to. There's no change in the horizon because we can't snap our finger and all of a sudden have 12-inch pipe instead of 8-inch pipe, right? Like if they're going to 2,500 in 10 or 15 years, we need to know that now. So we start planning for it and with our infrastructure and so forth. So
1,500 is just a whole string. Just what they pump, you know, from an engine, that's 1,500 GPMs and 20 PSI is what the residual is left in the main before it starts to collapse on you. I mean, you know, we talk about when I say Carlos, are you talking about the wildland area or are you talking about down here? Because down here, I mean, you have everything is fire sprinkler, you know?
that was their reasoning, was that even though the buildings are getting bigger or they're newer buildings, they're going in with a lot of fire protection built into those buildings, like sprinklers and ratings and the construction type.
Correct.
So I guess that the point I wanted to make to the board was we had that conversation. It doesn't look like anything's changing moving forward. We're keeping our outlook the same. And then lastly, what I wanted to report on was, you know, you've heard a lot of discussions about the fires down in Southern California, how the water system reacted to that kind of demand down there. And there's a lot of political talk about what's happening down there, and it's been, I would say, politicized to a certain extent. I want to make sure that you understand that no urban water system is designed or has ever been designed to fight that kind of fire.
Wildland fire.
A wildland fire in an urban area, our system, any system is not designed for that. Right? It just can't handle it. It doesn't. But with that said, we're thinking through perhaps doing a stress test of our system, right? And seeing what it can handle on paper, using the hydraulic model and just seeing what we can and cannot provide and for how long. Right? And so that's something that we're talking about on a management side, and it's maybe something that we end up doing, but no matter what kind of system they had down there, it just would have been overwhelmed. It may have just taken a little bit longer, but if some of the reservoirs were in the system, but it's just not designed for that kind of fire, so.
Would you be looking at fire on the wildland perimeter of Belmont for the stress test, or are you just looking at?
We haven't talked through the scenarios or how to set up the model yet,
Right.
but, and we may end up not doing it, but it was just something that we were curious how the system would react over a period of time, pumping up, pumping down, and so forth, so.
And you also working on the tank recoding design too.
Oh, you know what? I'm sorry. Yeah, I had it on here. Tank projects. Yes. There's two tanks. I'll have it written up here for the next project, but there's two tanks currently that are budgeted that are for recoding. The coating in those tanks has exceeded their lifespan, and we're looking at
Which ones
recoding.
are they?
They are, at one of the Exporns and one of the West Belmonts. So we do one tank each at the site just because of
course.
we can't take both out at the same time. So,
That's smart.
and then we're probably, there'll be some conversation had internally as far as when we want to do that, even though the design will be done. The timing of it, again, to make sure it doesn't happen during a high demand, high fire season. But yeah, I'll try to spend some of your money.
Yeah, that was showing up in the budget and stuff, yeah. Okay.
Yeah.
Any
But
questions?
you're right, it's when politics gets into these situations, a lot of what we hear is from people that have no clue what they're talking about. They have no idea, and, but they sound good on TV, so they say it, so.
A lot of times, or not a lot of times, I agree with you, and when a house burns down, the meter is open. Right, and so there's a lot of times water is flowing out. And so it's almost like you're having these leaks in your system when houses burn down. And so LA County and DW, Department of Power and Water down there, DPW, they're looking at an education campaign that when you evacuate, perhaps there's an easy way to shut off your water and gas as you leave. I mean, obviously people are rushing out and stuff, so that might be the last thing, but essentially there's leak points as the houses burn.
But even here, even in the urban area, I don't remember going to any fire where there was not water going, because as soon as a stud collapses, it's gonna bring down the copper line with it, and that's it.
Yeah, then
And then
you're
you have a stream going up.
Right.
So.
So, I think there's gonna be a lot of investigation as far as what happened, obviously, post analysis, and also a lot of things that will come out that we may implement up here or any other urban area, but you're seeing a lot more of these. Paradise, right, was Santa Rosa got overtaken by these kind of fires, and but there's also that struggle, and I'm sorry, I know we have two new board members, but for their sake, you folks, you guys know this, that we struggle with, you can't just keep a tank full all the time because of water quality, right? The water quality, the disinfectant product in that water degrades, so you have to cycle it. People have to use the water, and then you fill it back up, right? And during the winter time, during this time, this is the most critical November, December, early January, where people turn off their sprinklers. So water demand drops, but we're still not wet enough where we have that fire danger, right? That's the hardest part for our water operators, because we have to keep that water quality, but we still have the fire danger, so it's not wet enough where we can not worry about fire, especially down there. So it gets, it's a little bit wetter up here, but especially down there. So there's always that struggle of keeping enough water for fires, but also water quality and not having it go bad. Because water has a shelf life and it goes bad with the disinfectant that we use in the water.
And they have that wind too, which even if the moisture level was a little bit high, that wind would just dry everything in a matter of minutes, so.
Thank you for that.
Okay. Administrative services.
All right, I will keep this short and sweet. So one of my big focuses obviously was the director vacancies. I think we can say that it was very successful, exhibit A and B. I do think that it would be wise to point out that prior to the deadline, we did have an applicant reach out to ask questions. So even though we had 7 applications, we did have 8 inquiries. And then even after the application deadline closed, I did have 2 other applicants reach out to try to see if they could apply afterwards. Obviously, they could not. So in reality, there are 10 people that were interested in these positions. And I think that that's just something that we should all be able to understand, that that was a really big push on our end to get this information out to the community. And in comparison to the last big push to get a board member, when we were struggling to get the 1 and we got the 10 people interested. So I'm very happy with the outcome for that. I decided to put in all of the new law recaps for all of employment law that were out. So I summarized everything for us. That's mostly just for myself, so keep me on track. And then also December 12th, we had a lunch and learn where we implemented the new evaluation process. And I think that it's been very well accepted. The veteran employees who have been here for 10+ years are very excited to not be evaluated every year, and are being happily goal assessed every other year and evaluated every other year. So they're going on a biannual evaluation. And I think the supervisors and managers that do have to evaluate a multitude of employees are also feeling the alleviated pressure of all the paperwork. All the features of ADP that we have been paying for in the past that we weren't utilizing, we are now implementing them, and the payroll packet has been cut in half. So we are streamlining with digital, and paper is being cut in half, which I'm very happy about. And then a highlight was watching Jubin present at the MPWD luncheon. Jubin, I will go and watch you present anytime. That was very entertaining. So thank you very much.
I was going for educational, but entertaining is good.
Educational and.
All right, there. I appreciate that. I appreciate
welcome.
Okay. Operations manager.
Yeah, thanks. On the first page, under maintenance, I'll make one observation and share with you. You know, we've had AMI meters now in service for over 10 years in some places. So we've been talking about, hey, we need to come up with a meter replacement program, because we know over time those meters are going to get slowly slow down, not read accurately, and we're going to have issues with the batteries, with the AMI, needing to be replaced and so on. So anyways, we took out 20 meters that we know in the system to be some of the oldest, to have them tested, bench tested at a meter shop in the Central Valley with a contractor that we use to test our meters in place here in Belmont, and other agencies use the same person. Of those 20, we found 2 of them that weren't reading very accurately. The others were all 95% plus, which is kind of within range of the manufacturer, but the 2, one was like at 85% and the other one was like at 20% or something like that.
It was scary low.
Yeah, it was pretty low, and over certain ranges, because he tested the meters over a really low flow rate, a medium flow rate, a high flow rate. But so anyway, so we ended up replacing those 2 meters that tested out of range, and we're gonna do some more testing to kind of get a sense of, is this a situation that is something we need to deal with, or again, can we just come up with, be a part of our program to replace meters? So that'll be something I'll be coming to the
Is
board in the future.
Is the lifespan of these meters shorter than the mechanical?
Well, the lifespan of the body, or the bodies, because they're typically brass, most of them are brass, they're warranted for like 25, 30
Oh,
years,
yeah.
right? But you've got some plastic components that wear out, right? They're mechanical, they spin around, and they have a little magnet that might turn the register. And so the plastic components will wear out. And that's why meters slow down. Meters never read fast, meters start reading slow because the mechanical parts start getting sloppy, they don't turn as quickly. And that's what I think what's wrong with those meters. It wasn't the register that has the battery or the transponder that sends the signal. It was a component inside wasn't working well. So we just decided just to replace those 2 meters, and we're just gonna do some more testing to find out how many other meters are we seeing like that, and is there a pattern someplace that might help us come up with a plan for meter replacement?
And so that topic came up during our water loss audit validation, which with the third party validator, eSource. And they said, oh yes, we're seeing that elsewhere, other agencies with that particular, and I forget the meter name.
The census is our 2 meter.
Yeah, that's our 2s. In particular, seem to be really bad, and so that's happening. So we actually have a meeting next week with eSource to talk more about what they're seeing and kind of start developing what our meter testing program looks like, or replace it, you get their, input and potentially help with that.
And then on the next page, I typically like to share with the board how busy you are just doing the locations, underground service alerts and USAs. So during the month of December, we had 272 requests, and that kind of compares with the average. The rain average is 270 a month, so it's pretty much on par with average what we might see in a typical month, which isn't bad for December, because typically in December, Belmont does not allow any construction to take place because of winter weather, but we still get requests. And then the last thing I'll point out is on the last page under administration, remember we had that break-in back in April, and they took a truck, they took a bunch of stuff from us, right? Well, we identified as much as we could, and we submitted a claim to Aqua GPA, and they reimbursed us to the tune of $155,000 for the stuff. I mean, I was amazed at, that truck that they took, truck 787, which is our service truck. There were so many brass fittings and stuff on there, and, to replace those things, a piece of brass pipe is expensive.
Very expensive.
Very expensive. So, I mean, we were able to itemize. I mean, the guys know what's on that truck. And so between them and myself, we put together a spreadsheet. I mean, I had like a 6 or 7 page spreadsheet of all the things that we knew that were taken, and they were, generators or pumps or whatever. And submitted that bill to JPIA, and it took them a little bit of while. I contacted, hey, what's the status? Do you have any questions? Can I answer anything for you? He goes, well, this is a big enough number where it goes up the food chain and somebody else has to approve it. And after I talked to them, within like a week or 2, we received a check for $155,000. So everything's taken care of.
They didn't need objective evidence, just the claim.
They just say, oh, they asked for the claim. Yeah, they didn't come out. Yeah, I think that they probably see this from time to time, right? And they know that, we're not gonna try and pull the wool over their eyes type of thing. And that most of these people who are working in that field, and I'm pointing at the fellows over there in the operations center, they know it's on their trucks, and so that they didn't question. But I was surprised because it was a lot of money.
I mean, there was some really expensive equipment. There was USA locating
Yeah,
equipment.
pipe locating equipment.
There was the
that's
water
like-
quality testing equipment.
Yeah,
It also covered the damage to the roll-up door.
yeah, that was
That's
almost
after the truck
$30,000.
I mean,
You wonder what happens to these equipment, because it's not like they sell it on eBay, you know what I mean, like, what's.
Gone out of the country probably somewhere.
Oh, God.
I imagine tools might get a swap meet someplace, but some of the big power equipment, like our big wheel saw for cutting the asphalt, that was stolen. And it was on its last legs anyways, but it was stolen. And
I was
somebody-
okay with that one.
Yeah,
Or had
But yeah, there was some new equipment that they took from us, and so anyways, it's over with, it's been replaced, and I mean, we replaced equipment, and you know, Aqua JPA, you know, we're all paying for it, but you know, they reimburse us for the loss.
It also speaks to our relationship with JPIA.
Yeah.
It's not a regular insurance company, it's, you know, being joint powers, and we're a member and we're part of it, so
Good
it helps.
question. Renee, on the 2602 Montserrat
Yeah.
main break, did that water go down the hill to San Juan like we?
Well,
3,000
I
gallons
did,
of
I did
water.
get the report that it did, I'm assuming it probably did, but it just wasn't as bad as it was at that time several years ago when it flooded out.
Well,
the-
that was
That
a
was
main failure,
Right,
yeah.
right, yeah.
Yeah,
So this one wasn't quite as bad.
okay. That was pretty close.
That was bad. That one was bad.
Yeah, all right.
Okay. General manager.
I got a lot in my report, but I'll try to go quickly, and then of course, if anyone sees anything else they want me to mention, please let me know. So in response to the fires, I thought I'd highlight, you know, kind of what we've been doing, what kind of outreach is related. Interestingly, we haven't gotten any questions ourselves from the public, you know, on the phone or email. At the HIA lunch, you know, I did get a question directly there, but other than that, nobody's reached out to us specifically. Action let me know that the city was getting requests and questions a fair bit, and asked us for help in responses. So we did put together that, you know, relatively brief statement, which I have attached here, and provided it to them, and they put it on their fire resources webpage, which I did give a link here too. We are working on drafting a more complete emergency preparedness page for our website. And we actually coincidentally, I mean, had been planning for that to be our focus for the next Waterline newsletter that we were doing, so that will, you know, really just center around lots of aspects of emergency preparedness, including the capital improvement projects that we've done and then have planned, which are all really, you know, focused on that. And also, as another pure coincidence, Jubin gave his talk at APWA, perfect timing, on public works visibility, how to be recognized as first responders. So we had the whole crew there, Rena, Allison, myself, Michael Anderson came, and then Kirk also came and saw a great presentation. One thing that, you know, he brought up is APWA has this badging that's nationally recognized badging with public works as first responders, and so we're gonna look at getting some of that logos on our trucks, you know, stickers, hats, other things as appropriate. Just, you know, as Jubin's talk, I feel like I'm stealing it, but you know, kind of 2 points of just increasing the visibility and recognition as us, as first responders, as well as in an actual emergency, you have that clearly identified so that we, you know, hopefully get the recognition and access that we need in a timely manner. So it'll be a good benefit. And I did run it by Action. He had no problems with us using that language, no conflicts with the city, so. And there was also a webinar on wildfire safety that San Mateo County Department of Emergency Management put on, and so we helped advertise that on our website as well. And then also Aqua has actually been working for a while on some efforts related to wildfire. They had a bill, a national bill that they were partners in sponsoring, which I see a typo. It's not Fox Our Forest Act, so it's Fix Our Forest Act. And it, you know, it didn't go anywhere last year, but they are reintroducing it now. So I've attached a couple summaries from both CSA and Aqua on that if you're curious. Our rate increase went into effect January 1. We did update the website and the FAQ to be, you know, past tense, so all the same information is there, but it's clear that it's been enacted, it's not proposed. I mentioned the notice we got from SFPUC today. We also approved a contract with Best Utility Solutions for an on-call services contract. Really the focus of that is to have on-call a vacuum truck. This has been a request from employees for many, many years of why do we have to hand dig every hole? Or, we're fortunate that the city of Belmont will often loan us use of their truck and an operator when they can for a vacuum truck, or we also have borrowed in the past from Westboro Water District. But when you have a break in the middle of the night, our operators are out there digging by hand all the time. It's pretty standard in a lot of larger agencies to have a vacuum truck, but they could easily cost $500,000.
For water? For the.
For the
excavation.
excavation.
Using it, especially in close
Vacuums up
quarters.
the dirt.
Yeah, vacuums up the dirt, especially in close quarters, we have other utilities like, power or gas or something like that.
So
you do
water, you jet the water.
Yeah, you jet the water and you vacuum it up.
So it's safer for the utilities, less of a risk if you're gonna break the pipe yourself. It's, using that instead of manual labor certainly reduces the risk of injury for our employees. But the problem is these trucks are incredibly expensive to
Yeah.
buy and maintain, and the reality, if we're only using it a couple of times a year for main breaks.
Yeah.
It
Yeah, we don't need it. We
just
don't
doesn't
need it all the time.
So that's why I really pushed to get this contract in place. So now it'll be on-call services. Best has, even after hours, they can provide a truck and operator to help us. It's also really key for employee retention, as we've, very successfully hired experienced operators who've come from other cities where they're used to vacuum trucks. They come here and it's like, what do you mean I gotta hand dig everything? So, now we have that option. So I think everyone's quite happy about that. And it's already being used on our.
What's the response, 24-hour, 7 days a week response?
Yeah.
And when you call, how long would it take them to come to on site?
I'm not sure where they're coming from, but I think it's, down south of us. And so we have a contact with them and we call them out, say, hey, we need a truck, and they send somebody out. And we pay an overtime rate, but we don't use them all the time. So the $25,000 is probably more than what we need for a fiscal year type thing.
Yeah, and that's the same as our, on-call contracts with
Yeah.
Dayco and C2R. The
Right.
$25,000 is a magic number because above that, they have to be bonded. And have a certain bonding requirements, and when it's an on-call contract that you might use $5,000 a year, you don't really wanna force those requirements on them. So, and even main break in the middle of the night, as far as response times, we can't start digging right away because we have to wait for USA, even in an emergency main break. So, if it takes them a little time to get here, that's fine. So another project with eSource, so we're just starting this project to do a billing and AMI data chain assessment. This is something that we actually started discussing with eSource when Monique was here, so she had input on the scope, but timing wise, it didn't make sense to start until, now. Especially, Val's is now familiar with things, so this will be a really good opportunity to go through and evaluate our billing processes, hopefully to get, suggestions from eSource on additional, automated manual QA, QC measures, review our data transmission, see if there's anything going on that could improve our apparent water loss, which is water that's actually going to the customer, but we're not billing for. Or, real water loss as in, hopefully improving, earlier detection of leaks. So it's a, relatively minimal cost for the assessment, about $26,000. It's been budgeted for, so we're gonna get that going here very shortly. Board member recruitment, we've talked about plenty. Operations manager recruitment, since Brenna will be leaving us in October for better pastures. We're starting the recruitment all.
Right into the sunset.
Yeah. So, I'll share the brochure, when it goes out, and you all can share with your networks, and, hopefully we'll have as successful a set of candidates in that recruitment to look at as well. So, I think everything else is, if you have questions, I'm happy to talk about, but I don't see anything else I guess I will point out, for the February meeting, I'm not planning to be here in person. I will be here by Zoom. I think this is the first one that I'm doing by Zoom. I'll be at the GPIA leadership class, the second of their in-person ones in Roseville. So it's either that or I miss a good chunk of the class driving back and forth for the Thursday, Friday class. So that's my plan, to be here by Zoom.
We want to turn your plane or what?
If you wanna, but.
St. Carlos is Santa Rosa?
Mid-Penn helicopter.
No, it's in Roseville.
Roseville.
Yeah.
But yeah,
Oh, that's Santa- oh,
It was like
Roseville.
Sacramento area.
Yeah,
Sacramento,
Okay,
okay.
yeah.
Yeah, I'm sure they have a little municipal.
Well, they have an airport right down the road.
Yeah.
Helicopter.
Or
McClellan
I could
Air
drive
Force Base is
really
like
fast.
right down the street from my house, so.
By the time you get the plane, you get the car at the other end, you get to the meeting, and so on.
Fine, from our helipad here. So what else?
I mean, you approve all major expenses. If you wanna, we could just get, instead of a backtrack, we get a district helicopter and pilot. How about that?
Zoom is fine.
Okay.
So let's talk about our
Yeah.
reserve.
All right.
Good. So that's all of the management reports, directors' reports.
One minute, are we going to have an update on the folder?
Yeah.
Okay,
So there's a brief update in there.
yes.
They
I
are
had a question mark on it.
updating, we can talk about it now. They're working on updating the cost estimates. We're also keep pushing Carlos to get on the planning commission agenda. It's looking like we'll go to planning commission in March and then,
Okay,
and so we'll get the updated cost estimates. We'll bring it probably to finance committee first and then the board to get the full, update. But we're kind of still in the same limbo. We've submitted an application. We've been talking, and coordinating with the city a lot. We don't have the official comments and it hasn't gone to planning commission, so we're kind of holding batter, but.
Okay. Directors' reports. Anything?
In 2007, I got into a bet over climate change. And I've now won the second stage of that bet. So I apologize for winning that bet.
It's all your fault.
Karma gets you every time.
That's it.
Louis?
not much, HIA, which I'm sure you can comment on it.
And we did have a finance committee meeting.
In the finance committee, that's right, yeah.
Right. So HIA was talking about the county's mental health program. No, wasn't it?
No,
This
San
one?
Carlos, specific plan.
San Carlos.
Oh, the
Something else
specific
we went
plan is done, yeah.
Oh, it was that specific thing again. Okay.
Yeah,
I've seen that so many times, it all runs together.
yeah.
And so they're hoping to go soon, but they didn't promise much of anything.
Maybe that water supply assessment.
Yeah, so they're hoping to get their draft environmental document out this summer. So. Other than that, there wasn't that much there, although.
Was a very valiant try though.
Right.
They tried hard to impress.
Okay, so, communications. So.
Yeah.
Discussed,
So on the communication, I just asked if we could talk
yes,
a little bit, maybe the general manager could talk a little bit about our former president, Henry Hang Jacobe. Probably nobody knew him. I knew him personally, not well, but I don't remember him on the board. He was on the board way before me. Good man, but we found a lot of stuff on him, so it will be nice to recount a little bit of what happened during his term as both as a director, vice president, and a president. It's just paying tribute to a fellow past director who is no longer with us.
Yeah, so he served on the board for about 20 years. He recently passed away. He served what a difference.
14 years actually.
14 years, yeah. Resigning from the board in 1978. So, yeah, none of the employees remember or overlapped with him. But it was a different time. For sure on the board, a lot of very interesting stuff. And so we have the summary here, but I should also thank Misty, who put this together. She went through 6 books of our meeting minutes, going through all 14 years of board meetings to compile this information.
She did good. She did an excellent job.
Yeah, so he was born in 1927 and went to Balboa High School and had a degree in accounting from Golden Gate University. He worked primarily for Deloitte for 30 years. And so he was interviewed in 1964 for the unexpired term of Director John Schmord. And so he was sworn into office in 1964, so he was a midterm appointee to start with. And he played a really integral part in approving the interagency connection with the city of Redwood City for us to actually supply water to Marine World in Redwood Shores when it was located here. He himself, board members, I think, did a lot more hands-on things back in the day, less staff. So he himself served in or participated in the meetings with the city and their attorneys for this whole project. A lot of heated debates apparently and back and forth regarding this project, but they got it done. He was involved in the creation of the first employee association for the district in 1969 when it was the Belmont County Water Employee Association. He was involved in the purchase of the Ralston Pump Station easement from Notre Dame in 1970. The property cost $4,000 to buy, plus $105 in title fees. Different times. And this pump station, the construction was complete in 1970, and then it was later renamed after former board president Hardy Hannibal in 1974. So that's our Hannibal pump station. At one point, the district actually attempted to add fluoride to our water system ourselves, but that failed. So and it went to went to the voters, and it failed at that point. In 1973, the district actually survived a bomb threat where a device was left in one of our tanks, a named tank. So that went fortunately well.
That's a funny way to phrase it.
And you can thank him for being involved with the early days of happy hydrants. Everybody loves a happy hydrant.
Oh, he started it.
He did.
There's some right over by the history room if you want to go have a little walk down memory lane.
And then,
Not for an engineer.
and then finally, in 1975, there was an attempt for the district to be consolidated with the city of Belmont, and that went to the voters and also.
One of 2 attempts. This
Yeah.
was the first one.
Yeah.
And there was another one shot
The
down.
district did
And that
survive.
is when the board meeting was held at Carmel High School, and the whole gym was packed with
Oh,
people.
wow.
And that's why they did it at Carmel High School, because half of Belmont was there,
Wow.
so, yeah,
Oh,
but
and
it failed both times,
he also served when the first female field employee was hired in 1978, which I don't know how many we've had since, but it's not many.
Yeah.
So,
First time I heard that.
and then, Misty also compiled actually our water rates during his tenure, which is interesting. Because we've had tiered rates even going back to the 70s. The tiers are slightly different. We had a tier of 0 to 5 units, 6 to 100 units, 100 to 400 units, and above 400 units. And if you're using above 400 units, it only costs you 24 cents. At some point, they kind of changed their structure, and they went to a tier at 20 units, at 40 units, and above 41 units, going from 48 cents on the low end to $3. So big jumps that
$3 back then was a lot.
we could not do if we wanted to under current laws.
Wow.
But that was before Prop 218.
Way before.
Very good. Interesting. Interesting. Okay,
Okay, so, we have a closed session schedule.
We do.
We still have it.
We
We have to
do.
do it. right?
We can do it pretty quickly. We can do it pretty quickly. And so I think Rena's gonna participate, but he wanted to hit the road. given
Yeah,
that
I'll
it's-
stick around.
That makes it a little easier than calling
Kurt
you.
says we'll do a quick update.
all right.
Hey, it's not my fault.
That's only a promise.
Right.
You never know. All right, guys. Take care.
Yeah.
Coming
Thank you very much.
Thanks, Jen.
now.
Hey, Julie.
We're back in session.
And we have no reportable action from the closed session.
Correct.
Well said.
Thank you. We're adjourned.
Thanks, Julie.
All right,
Julie.
thanks, everyone. See you next month.
Thank you. See ya.
Good night.
Bye-bye.